Namaskara. A very good morning to all the ladies and gentlemen. A warm welcome for the seminar on Direct Tax Code versus the Income Tax Act organized by the Chamber. And today's session is deliberated by eminent personalities, industry experts, and professionals. Thank you very much for making it convenient to participate at this session. I am Roopa, Assistant Secretary General at the Bangalore Chamber of Industry and Commerce. Today's session is organized under the aegis of the Direct Tax Expert Committee, chaired by Mr. Sunil Dhareshwar, who is the EVP and Global Head of Infosys Limited, co-chaired by Mr. Sriram Ranganathan, who is the Vice President and Global Tax Head of Wipro Limited, and mentored by Mr. R Sekar, Past President and Partner, Deloitte. And the Chamber acknowledges its support to today's guest speakers, Mr. Padam Chand Kincha, who is the partner at HC Kincha & Co., and Mr. P.V. Srinivasan, partner and chief mentor at PVS Advisors. Thank you. I now invite on stage Mr. C.A. Ravi, who is the Vice President, BCIC, and Director at VR e-Biz Solution. Welcome, sir. I invite Mr. K.R. Sekar, partner at Deloitte. I invite on stage Mr. P.V. Srinivasan, partner and chief mentor at PVS Advisors. Welcome, sir. I invite Mr. Sriram Ranganathan, co-chair of our Direct Tax Committee. Mr. Padam Kincha will be joining in the next few minutes. The Chamber acknowledges the support of our annual sponsors for their support to the Chamber in all the activities. We have a set agenda today. Opening remarks by Mr. K. Ravi, who is the Vice President BCIC, setting the context by Mr. Sriram Ranganathan. Then the overview of the current bill by Mr. K.R. Sekar. Then charging sections, what is well done and missed opportunities by Mr. Padam Chand Kincha, and administration and appeals by Mr. P.V. Srinivasan, and Q&A moderated by Mr. Sriram Ranganathan. And today morning we have received the message from Mr. Balasubramaniam that he is unable to join owing to his immediate appointment with the Honorable Finance Minister. He has sent his regret and he has also conveyed his best wishes for the Chamber. So before I invite Mr. K. Ravi, Vice President, to deliver the opening remarks, I'd like to briefly introduce him. Mr. Ravi has over 35 years of experience and he excels in domestic and international taxation, investment planning, and corporate audits. His expertise extends to advising foreign entities on entering the Indian market, and he has held very prominent positions in various industry associations and CA Institute. I now welcome Mr. Ravi. Over to you, sir.
Good morning to all of you. I would like to extend a very warm welcome to all the speakers here. Mr. Padam Chand Kincha is on the way. Mr. P.V. Srinivasan, partner PVS Advisors. Mr. K.R. Sekar, our past president, and also the mentor for the Direct Taxes Expert Committee. Mr. Sunil Kumar is not here. And Mr. Sriram Ranganathan, the co-chairman of Direct Taxes Expert Committee. It is really an honor and privilege to welcome, I think we have some past president, Mr. Ravindran, some of the MC members, and also other members of BCIC and other invitees and guests. As you all know, the Indian tax landscape has undergone a series of changes over the years, and one of the most anticipated transformations is the introduction of the Direct Tax Code 2025. The new framework is set to replace the current Income Tax Act of 1961, which has served as the backbone of our tax system for over 6 decades. With a view to simplifying the existing tax framework and promoting ease of compliance and aligning the system with the global best practices, the Government of India has introduced this Direct Tax Code 2025. In fact, the code promises to overhaul the existing system and bring in much needed reforms to ensure a fairer, simpler, and more efficient tax regime. The new code also focuses on improving tax compliance with an emphasis on transparency. It proposes mechanisms that will make it more difficult for individuals or businesses to evade their obligations. This will, I'm sure, will not only increase the revenue generation for the government, but will also create a fairer tax environment where those who contribute are not undermined by those who evade taxes. Furthermore, the revised code is expected to encourage foreign investment by aligning our tax policies with international best practices. The Direct Tax Code will make India a more attractive destination for foreign capital. This is particularly important in an era where countries are increasingly competing to provide favorable environments for investors. A simplified tax regime with clear regulations will undoubtedly enhance investor confidence and foster long-term economic growth. However, while these changes are certainly promising, they do not come without challenges. The transition to the new code will require significant effort in terms of infrastructure development and training for tax professionals, businesses, especially SMEs, who might find it challenging to adopt to the new regulations initially. But in the long run, the benefits of a simplified, less cumbersome, and less burdensome system will outweigh these initial hurdles. In fact, when I was having a cup of tea, it was mentioned that how do we change over to the new sections? All of us are last 3-4 decades have got used to the old sections. So somebody said probably use the AI and all the sections will change, and that is what is there. And I think it's good for the newcomers who enter the profession to get to the new sections. As a Vice President, I would say I believe this reform is welcome and necessary changes for our nation's economic landscape. The code will not only support our local businesses, but also send a strong signal to the global community that India is committed to creating a fairer, simpler, and more robust tax environment. The proposed changes will undoubtedly improve India's ease of doing business rankings and lead to a more investor-friendly environment. I would like to congratulate the Direct Taxes Committee, who have been very active and have organized a number of programs. In fact, we started off with presenting a pre-budget memorandum to the Finance Minister, and I'm sure Mr. Sekar will mention to you how many have been accepted by the Finance Minister. Quite a few have been accepted. That's really a credit for the BCIC. Later on, we also had a meeting on the analysis of the Union budget and on direct taxes under the auspices of the Direct Taxes Expert Committee, which was also very well attended. As BCIC, I would like to share a few of my, few of the developments which have taken place in the last 1 month. We are very much delighted to share that BCIC played a pivotal role in connecting the government of Karnataka with SMRJ, a government of Japan agency for MSME, where they have signed an MOU at the Global Investors Meet. This was facilitated by BCIC. In fact, this particular agency is promoting exports from Japan to India and also promoting joint ventures. Many companies of BCIC have applied, and the government agency have invited them free of cost. They have taken care of the travel cost and also the stay. And I think this is one step taken by our Japan Initiatives Committee since BCIC has an office in Japan. The other point which I would like to mention also is we had an exclusive networking session with the Bahrain Chamber of Commerce and Industry on 13th of February 25. The ambassador and the senior members of the chamber from Bahrain, they had also come for the Invest Karnataka meet. They interacted with our members. We had a B2B meeting with them, and they have invited us to Bahrain for a delegation. And one of the main attractions is that they say there's no income tax, no wealth tax, no capital gains tax. Repatriation can happen from there. So those are few Probably we'll come out with one article on the opportunities in Bahrain. Those of you who are interested can surely join the delegation whenever it is organized. In fact, we also had the occasion to meet the ambassador of Tajikistan to India. Then another very important program which happened in the recent past was the seminar on listing and fundraising opportunities in the gift IFSC exchanges recently, which was organized by BCIC along with NSE, IX and IFSCA. This new framework allows unlisted and listed public companies to list their shares on the two boards operating in Gift City. BCIC is now planning to take a delegation to the Gift City in the month of March, led by our past president, Mr. Ranganathan and Mr. Sekar. Those who are interested in joining the delegation can do so. And lastly, I would like to request those of you who are already not members of BCIC may please contact our secretariat and see that you become members and take the advantages for all the programs we organize. I would like to thank you all for being here for the seminar, and I look forward for meaningful insights into the code on the direct taxes, and whatever suggestions you give, I'm sure we will put it across to the government and see to that the direct tax code, which is going to the final act, will be very useful. Thank you very much for coming. Let's all have a nice discussion on the direct tax code. Thank you very much.
Thank you, sir. And once again, a warm welcome to Mr. Padamchand Kincha. Thank you, sir, for accepting our invitation to be part of this session. I now invite Mr. Sriram Ranganathan for setting the context. Mr. Sriram Ranganathan is a chartered accountant with over 2 decades of experience. He plays a key role in formulating tax strategies, optimizing tax structures, and ensuring regulatory compliance. He has extensive experience across multiple finance roles, including business finance, financial planning, mergers and acquisitions, and controllership. Over to you, Mr. Sriram.
Thanks, Roopa. Good morning and welcome all for the session today. It's an exciting time to be a tax professional, right? I'm not sure, how many countries try to redo the tax law from the base altogether, try to come up with a new law, and I'm lucky to be in the profession at the time when the country is making an attempt. As we all know, this existing law has been in existence since 1961, and what India was in 1961 to what India is today, or the globe in which we are operating today, has changed substantially, right? 1961, the economy was more closed, internal focused, lot more controls, the license Raj. From there, we moved into the 90s with the economy opening up. And today, the globe has moved to a stage where we are talking about Pillar 1 and Pillar 2, how to tax digital. The concepts of, permanent establishment are being challenged with the evolving business models. So with the change that has happened globally as well as in India, there was a need to relook at the tax code, the way the tax principles have evolved over a period of time, and there's a good attempt to try to rewrite the law. And what has also happened, as you all know, is over a period of time, the act has gone through significant amendments, and possibly not the most well-structured act because of the pace at which the businesses were evolving, the whole global scenarios were evolving. So, we used to jokingly say the number of provisos and explanations far exceeded the number of sections in the act, right? And every proviso, every time a new scenario comes, you put proviso. Now, unless you read some 4 provisos, you may not really know what happened to what the act original section actually meant. Add to that the complexity of multiple jurisprudence that has happened at multiple stages, the act became too heavy to handle. So there was a need to relook at the entire act, and possibly that's where we are today to discuss what the government has come with, a new proposed bill. But having said that, right, now there is an expectation from the taxpayers that there will be significant reform to the tax law, right? The government has, over the last 2 years, been messaging saying this is a simplification exercise and not necessarily a tax reform exercise. So possibly, there could be an expectation mismatch of what the taxpayers wanted and what has actually come out in the bill, right? So today we have with us three eminent tax professionals, and it, to get all of them together in the same stage along with Mr. Ravi. I think we'll be blessed. We are blessed to have such professionals addressing us today. In the panel, we have Mr. R Sekar. Again, a good part is, Roopa told me I need to introduce the panel. This panel needs absolutely no introduction. For people in the tax profession, we will all looked up to each of them. Possibly some of us have taken to this profession looking at the way that they have been carrying the profession over the last 4 decades. Each of them have more than 4 decades of experience. Mr. R Sekar, expert in tax is an understatement, has written many books, and he continues to be a mentor for us in the Direct Taxes Committee. And, he is the most enthusiastic member of our committee. And most of the times, he comes up with saying that, are we doing, why are we doing this, why are we not doing this? And to know that he is in the 5th or 4th decade of his career and still carries that enthusiasm for the law. We have Mr. Padamchand Kincha. Again, we've all, listened to him in the past, sir. Somewhere, we had a session where the tax officers called him the teacher that they want to listen to, and the tax officers called him the teacher. And third in the panel is my own teacher, Mr. PVS. We've all looked at, when I joined Wipro, we all looked at him from a distance, saying if at some point in time, if I wanted to do the tax role, it's because that the role that PVS has done before me. And a lot of us have taken up this profession, like I said, looking at the way these people have led, and we will not have better people to tell us what is really there in the bill, all right? So if as a sequence of event, we'll start with Mr. Sekar, who will take us through the journey of, we've had multiple instances. Government has made an attempt over last 2 decades to simplify the tax law. We heard about the direct tax code, then multiple committees being formed. What has been the journey for us to reach where we are reached with the bill? Followed by Mr. Padam Kincha, his analysis on what has really changed, covering specifically on the charging section, the deductions, or has something really changed, right? Or is it just like the sessions got rearranged? Followed by Mr. PV Srinivasan's view on the administration and the appeals part of the section. Has something really changed? Once we go through these 3 sessions, probably we'll have a Q&A with, I have a few questions, but I'm aware that last 2 sessions that was conducted under the Direct Tax Committee, we couldn't give enough time to the participants for questions. I'll limit my questions. We'll probably start with the participant questions, and that's how we'll go for the session. And without much ado, I would request Sekar to take us through the journey of the attempts that the country has made in the past and what has led to where we are today with the new bill. Thank you.
Good morning, friends. A warm welcome to this meeting. And thanks, Sriram, for the use of generous words on introducing me. And I don't want to be like expectation on income tax bill and then finally trying to find out what it is. So I do not know whether after my speech, whether it will be equivalent of Nirmala Sitharaman Income Tax Act or it will be genuine what you told about me. I have no idea about it. I'll leave it for the audience to guess it. After the budget, me, Sriraman and Sunil Dhareshwar, we all had a meeting. So we originally thought that we would like to have a 2-day, full-day conference on Income Tax Act, New Income Tax Act 2025, analyzing the sections in threadbare. And we had 2 agendas. Each section, corporate, agricultural income, everything we did identified the speakers. And to our utter disappointment, after the bill came, we decided we do not know whether we have time to speak for 1 hour. Nothing to speak for 3 days. And whether to do a study circle meeting in the evening 5 to 6 in our BCIC conference room with a tea and biscuits and then wind it up, or should we half a day session? Then we concluded at least let us do justice to what are the efforts that they have put, at least have a half a day session. So from a 2-day, full day conference, we brought it down to half a day. So you can see what was the income tax at what we expected and what it has come. That's one line that I can tell that. First thing is that there is a lot of expectations gap between the taxpayers, tax community, professionals like us, and the government of India as well as the ministry. There's a total expectations gap. Tax professionals like us, we wanted every aspect of the business should get plugged into the Income Tax Act. Starting from Pillar 1, Pillar 2, BEPS, e-commerce, everything should be part of the Income Tax Act. That is our view. Taxpayers' view was very simple. They wanted reduction in the tax rate. After the budget announcement of 12 lakhs, they lost interest in reduction of tax rates. But they wanted simplification in the Income Tax Act. So they thought that the new Income Tax Act will be simplified completely. Income Tax Department had their own expectations that what are all the amendments which are not in favor, that will get plugged, and they'll have more sweeping powers and wider powers. That is their expectation. But the government had a complete different expectation. They thought simplification means writing in a simple English. So there's a complete mismatch in this entire four. And I was sitting next to Padam, and I got a complex because Padam has written such a detailed analysis of the old act and the new act in the sheets of paper. And I told him, Padam, I am developing an inferiority complex now because I realize there's nothing is there, but you have written so much, I want to take a copy of it. But jokes apart, when we look at the history in the India, for example, people like me, PVS, sometimes this old guard also helps. This OGs, what Ashwin called in his language, OGs. We OGs also help sometimes because the Indian government was, right from 1977 when I started looking at reading the papers, Companies Act and Income Tax Act, they wanted to simplify right from 1977. Janata Party appointed Sachar Committee in 1977 on simplifying Companies Act. It gave a report in 1981. It finally saw the birth of the new Companies Bill by 2013. It took almost 32 years for the government to simplify Companies Act. And it took some more amendments to decriminalize the various provisions in the Companies Act. And still some of the provisions, but it took at least 5-6 years after the Companies Bill passed to decriminalize it. So Income Tax Act 1961, and when we started practicing Income Tax Act, for every provision we need to go to Income Tax Act 1921 to see the history of Income Tax Act 1921 and compare to 1961 and see what is the difference, why that provision has come, what is the reason. For example, if you look at it, incentives, those days under 80J, 80JJA, 80HH, 80I, we need to go back to Income Tax Act 1922 to see what is there in section 15C, equivalent of that section, and compare with that. And there were disputes. What is the income, what is meant by derived from, what is meant by attributable to. Quite a lot of disputes on every phrases in the Income Tax Act. And Income Tax Act is the only legislation where there is a dispute about commas and full stops. How commas can aid an interpretation, how full stops can aid an interpretation. Income tax is the only legislation where you have a dispute on the word between shall and may. Shall includes may under the Income Tax Act, may includes shall. English dictionary never defines, but Income Tax Act defines. Income tax is the only act where it starts from defining the meaning of a satellite to a normal language. So, huge disputes on every aspect. For example, section 79, when we wanted to know what is section 7, I need to go to Wanchu Committee report in 1962. Why 79 was introduced. So there is enough legacy was there in Income Tax Act 1961. And jurisprudence was well developed in the various courts, High Court and Supreme Court. Starting from agricultural income, non-compete fee, trust, charitable trust, what is trust, what is charitable trust, what is scope of chapter 3, what is meant by income excluded from total income, what is income included in total income, whether it means exclusion means it is included and excluded or it is excluded ab initio. Every provisions of the act were deciphered, interpreted by the high courts. For example, just gave a latest case which I discussed with PVS and Padam just 1 month back. In the case of partnership firm, you have a partnership firm and you have a sub-partnership firm as a member of the partnership firm. The partnership firm receives income, it distributes a sub-partnership firm, sub-partnership firm in turn distributes it. What happens to the final one? That is also a dispute was there. Kannada High Court gave a judgment followed by CBDT circular. That means every provision in the Income Tax Act, there is a history, there is a legacy, there is a jurisprudence. Everything was available. Therefore, the important challenge before the government was that if I am removing the existing Income Tax Act to the new Income Tax Act, the entire jurisprudence, are we going to disturb it or is it going to keep it live? That's the first challenge. The second important thing is that if you look at the number of committees that went through it, started with Rajachalaya Committee report in 1991. In between 1981 to 1991, Mr. VP Singh was a finance minister, introduced long-term fiscal policy where he said for the next 5 years, the Income Tax Act will be stable, and he is the one person who brought the uniform accounting year. Earlier, previous year used to have multiple years that he brought a uniform accounting year. He said he is the person who introduced a block of asset concept. He is the finance minister who introduced what is called the provisions in Income Tax Act aiding the depreciation investment allowance. He brought various changes in the Income Tax VP Singh as a finance in 1988. I'm sorry, in 87, before his exit from Rajiv Gandhi's government. So there was a long-term fiscal policy was introduced by I think that was the only time where finance minister introduced a long-term fiscal policy for the Income Tax Act, and that is the last time. After that, no other finance minister has done that. Later on, Rajachalaya Committee was appointed in 1991, and committee gave a report in 1993 suggesting abolition of wealth tax, abolition of gift tax, recommending the government to phase out all the deductions and the incentives provision and reduce the rate of tax. That is the Rajachalaya Committee report. After Rajachalaya Committee report, there is another committee report was brought in under Vijay Kelkar's chairmanship, where the entire tax reforms was put into Mr. Vijay Kelkar. After Vijay Kelkar, there is another committee report called HP Renina Committee report, where it talked about simplifying the income tax law. Then once again, there is another Vijay Kelkar committee report was appointed to go for non-resident taxations, to which in our Mohandas Pai was a member. So all the committee reports gave. In between, there is a committee report for every provisions. Section 10A, there is a committee report of Rangachari. Then there is a committee report under Section 72A for amalgamation. There is a committee was constituted. Then for the much talked provision of dispute resolution panel, there was a lot of discussions with chambers, NASSCOM. Me and PVS were part of the NASSCOM discussion for the dispute resolution panel. Don't blame us for DRP provisions. We are not responsible for the administration of DRP. We only recommended what DRP should be doing it. So there's a lot of committee reports and discussions took place with the government and various missionaries. And all those things lead to or culminated to the infamous Direct Tax Code. And when the Direct Tax Code was introduced, Direct Tax Code brought up various new concepts. Why I'm trying to bring all these things is that at every committee, whether it is Rajachalaya Committee or Vijay Kelkar Committee or HP Renina Committee or Direct Tax Code, it brought new concepts under the Income Tax Act. For example, Rajachalaya Committee report recommended that your deductions under 80HH and 80A should be changed to the income derived from the undertaking. Rajachalaya Committee report recommended the increase of R&D deduction. Rajachalaya Committee report recommended the abolition of wealth tax and gift tax. So if you go to Rajachalaya Committee report, it gave various proposals on the income tax act, including individual income tax act, capital gains and all. In fact, Rajachalaya Committee went one step further. No individual whose income is less than the limit return should be taken up for scrutiny itself. That is there. So every committee gave a constructive recommendations. And before the Direct Tax Code, there is a most important committee that was there, headed by Dr. Patsar Dishom, Tax Administrative Reform Commission. That was a wholesale tax administrative reforms. And I am proud to say that I was part of that committee. Where the TARC report, if you look at it, is 4 volumes, like what we have the folder, like this, 4 volumes of that folder. It dealt with every provision under the Income Tax Act, how to be administered. And TARC recommended that the income tax officers There should 3 categories of income tax officer. First, income taxer his task is only to pass the assessment order. His task should not be to collection of tax, and he should not be given any targets for collection of tax. Collection of tax should be delinked from the officer who passes the order, because moment you have a target collection, his mind is influenced by only by passing the order with the aim of collection. His job is a quasi-judicial, and therefore it should not happen. That's number 1. I'm just giving the top 3 recommendations from administrative perspective. Then second category of income tax officer should be, as task is only collection of taxes. The to TARC gave a recommendation, no coercive measures should be done. The third aspect of TARC function of income taxes should be like a relationship officer. If there are big important taxpayers or some categories, they should have a relationship person. He should be a one-stop shop, like organization, they have a relationship manager, he should also be a relationship. So that is responsibility in the tax department, relation with tax department will be good. So TARC gave a multiple recommendations on administrative reforms as well as on substantive provisions. Then came Direct Tax Code. Direct Tax Code brought new concepts, but none of those concepts were all appreciated by the industry. Direct Tax Code was the first one which brought the concept of POEM, but later on praise effective management as found in the Income Tax Act 1961 through various amendments and definition, followed by circular. Direct Tax Code brought in the concept of what we call the famous thing like in USA, what we call foreign companies taxation. They brought in that. That did not get accepted. Direct Tax Code brought in another concept of treaty versus Income Tax Act. They say later in principle, that is under the existing provisions of the law, 1961 as well as in, fortunately 2025 Act did not make any changes to that. Treaty or act, whichever is more beneficial shall override, is applicable to the taxpayer. That is what section 90 subsection 2. Whereas Direct Tax Code brought a change at that point of time. When I mean Direct Tax Code, it is a old code. When I mean Income Tax Bill, is a new bill. So don't get confused between that and this. The Direct Tax Code recommended that later in principle will apply. That means treaty or income tax, whichever carried amendment, the last will apply. Then Direct Tax Code came out with another revolutionary mechanism. Instead of minimum alternative tax on profits, it introduced minimum alternative tax on the value of assets. Thanks to all these things, Direct Tax Code never saw the light of the day, and I was happy it did not see the light of day because it made also sweeping provisions in the income tax department, and income tax department itself was not keen to implement it. With the result, it got buried. And the government got changed. So politically, they want to score over a point that we will bring a new Income Tax Act which is not in line with the old Direct Tax Code. We will be completely coming with a new Income Tax Act. Now, when you want to bring a new Income Tax Act, all the necessary provisions are already drafted, already in the part of the bill. The two important points for the tax professionals like us, whether Pillar 1 and Pillar 2 should be part of the Income Tax Act. Pillar 1 is nothing but taxing the global companies' profits in respective countries not based upon the function, but based upon the eyeball and the marketing activities and based upon the demand it generates or potential demand to generate. For example, if there is a global company, a e-commerce company operating in multiple countries, normally in India, profit will be subject to tax for that e-commerce company based upon the revenue that it has earned and based upon the profitability arising out of the revenue based on certain attribution principles. But the Pillar 1 wanted to change everything, stating that instead of taking a functionality attribution, you find out the developing countries should, based upon what is the demand that e-commerce company have potential to generate, from that basis you can identify the attribution. But whether India should introduce Pillar 1 or accept the Pillar 1 is a matter of debate between India and the developing countries. Therefore, it cannot come in the Income Tax Act. The second one, Pillar 2, which is nothing but a minimal rate of tax. Every country should introduce a minimal rate of tax of 15%. Every country should do that. And if this country is not levying a 15% minimal rate of tax, then the immediate holding company of the country has got a right to impose a minimal 15% tax. I am simplifying Pillar 2. It is not so simple as I thought. Pillar 2 is as big as that volume. I am making it very simple for the purpose of the discussion today. And whether India, that means if you introduce Pillar 2, there is no incentives under the Income Tax Act, there will be any tax holiday benefits, nothing. Every company should pay 15% Income Tax Act. The question was that whether Pillar 2 is relevant for India or not is a matter of debate, and India still not decided whether to accept Pillar 2 or not. And we have a tax benefit holiday under the gift city. Now, if I have to introduce Pillar 2, the gift city benefits will go off and nobody will get any tax holiday benefit under the gift city. The government is in a fix whether to go for a Pillar 2 and abolish the gift city or continue the gift city and not accept Pillar 2. The government is in a fix, and with the result, I was very sure that Pillar 2 will not come in the Income Tax Act 2025, the new bill. Now, therefore, what the government can rationalize or simplify. I cannot make a sweeping changes in the Income Tax Act, because if I make a sweeping changes, the entire jurisprudence developed over a period of time will be reversed. For example, today Indian tax jurisprudence is the most well accepted globally. The Supreme Court judgment on most favored nation clause, whether I am agreement or not, is a matter of a debate. Supreme Court judgment on computer software is a royalty or not. Supreme Court judgment on treaty interpretation, Supreme Court judgment on indirect transfer, Vodafone, are all the landmark judgments. Internationally, people look at it. Now, can I reverse the entire jurisprudence developed over a period of time and make a sweeping changes in the Income Tax Act? That's a point, first challenge before the government. Second, what new I can bring in? While every business wanted to make it simplify, what needs to be done? That's another challenge. 3, how am I to restrict the powers of the tax officers so that the justice and administration gets delivered? That's a third challenge. Fourth challenge, this is a government thought, and it came in the paper, it came in the public domain. The government wanted a common man to read the Income Tax Act and understand. I don't know how far it is possible for a common man to read. And I was speaking with one commissioner, Sekar, which common man is reading Income Tax Act? You and me only are reading Income Tax Act. And if common man reads, then you and I do not have a job. That's a fact. Sorry? Yeah, that's a fact. So fifth one, the government had another great intention. Simplify all the procedures under the Income Tax Act, make it technologically sound. Everything should be in the span of technology. By click of button, everything should be there, for which I don't need a new Income Tax Act. So the government had these thoughts. Now, when we had this sort of a conflicting objectives, one cannot deliver it because the objectives were totally conflicting it. What happened? The government said we are going to draft a new Income Tax Act. The government constituted a committee under the chairmanship of one of the former Principal Chief Commissioner of Income Tax. And there is a various government officials, only revenue officials were part of the committee. And they invited recommendations, suggestions from various people, and all of us gave recommendations and suggestions, thinking that all these suggestions would get part of the new Income Tax Act in one way or the other. For example, amalgamation. We all wanted that amalgamation benefit should be given for all the companies, irrespective of the fact whether it is an industrial undertaking or whether it is a service entity or whether it is a retail entity. All the benefits for the amalgamation and carry forward should be given independently. We don't want Section 79, which is closely held company losses should not be carried, that should not be there. We wanted to introduce arbitration conciliation proceedings by which the DRP is getting a power so that the disputes get resolved. We don't want any disputes, so therefore we recommended a lot of companies, including Bangalore Chamber, we recommended there must be something called emerging task force so that a EITF will debate all the issues and then give a clarity that will be a binding on the department. So like that we gave multiple recommendations. Unfortunately, Income Tax Act New Bill 2025 has not, I don't know whether they did not have time to go through all the recommendations or whether they decided to keep the recommendations aside. And what did they do? They made 3 important changes. One, all the provisos in the Income Tax Act is now removed. There is no provisos. If you look at the Income Tax Act, let's say simple example, section 32, depreciation, that it starts with the provision, depreciation shall be allowed. Then there is a proviso. Under Income Tax Act, proviso means it's an exception to that. It creates an exception to each of the charging provision or the allowing enabling provisions. After the proviso, there is an explanation which expands the scope of that particular section. Then there will be one word in Income Tax Act. We all love all the tax professionals love what is called the non-obstante clause, notwithstanding. In fact, there is a book about interpretation of non-obstante clause. It's like author like me who wrote a book. What is meant by non-obstante clause? So what they did, why to give opportunity for people like Sekar and Padam and Piyush to write a book on non-obstante clause? They removed the notwithstanding provision every places. And notwithstanding is replaced by a term called irrespective of. Irrespective of. Now, they did this changes. Now, this entire provisos were there. And we used to go to Income Tax Act, argue what is the impact of proviso, what is the relevance of proviso, what is the meaning of proviso. Now, in the entire Income Tax Act, the proviso is changed. There is an explanation that is also done. Now, what has happened? They put it very simple English. I jokingly tell my people who work with me, don't read Income Tax Act like reading Income Tax Act in a PPT. You have to read the Income Tax Act with a book. Read it completely. They made my job very easier. They converted the entire Income Tax like a PPT version. Section 1. Say following shall be allowed A, B, C, D, E, F, G. The following shall not be allowed A, B, C, D, E, F, G. Like that they made it simple. So they thought that moving from Renan Martin English and Grammar English and Oxford and Cambridge Dictionary and all the Collins Dictionary, Sampath Iyengar's Dictionary, all those dictionaries, let us move away. Let us make it very simple. So they thought simplification means changing the language. So first objective, they achieved it. Now what is the second objective? Powers of the assessing officers. We'll come to what taxpayers wanted. So assessing officers had an unbridled power under the 1961 Act. And we thought that the 2025 new proposed will address the powers of the assessing officers. Barring 1 or 2 sections or 3 sections, I don't see that powers of the assessing officers have been removed. It still continues. The reason is very simple. The Income Tax Act is drafted by the department for their purpose, not for my purpose and your purpose. With the result, the powers of the assessing officer is still there. So it has not changed. The third important aspect, what the government said, the new Income Tax Act will reduce the disputes. Now to reduce the dispute, there are 2 important things. First of all, there should be a prevention of dispute. And if there is a prevention of dispute, if it cannot prevent a dispute, and there must be a way to resolve the dispute. To prevent the dispute, it is just not act should be simple. It is just not understanding the act or anything. There are various phrases, various business issues which I need a clarification at every point of time. For example, the concept of capital expenditure, revenue expenditure is still relevant. The industry is changing. For example, in a telecom Supreme Court gave a judgment, license fee paid is a capital or revenue expenditure. Every industry, for example, in an e-commerce industry, whether I am laying a optical fiber link from Kashmir to Kanyakumari, whether it is a revenue or a capital, it's still relevant because the capital revenue expenditure is a old concept and relevant for all the industries. And the accounting concept of accounting has changed significantly. Now the dispute, what I call more than a dispute, I need a clarity and clarification on various business terms that I'm using. For example, in the flights when you are traveling, you get a voucher, a redemption voucher. Under the accounting principles, I need to get, if there is a value, I need to proportionate the value and adjust in my revenue under the IFRS principle, Ind AS principle, accounting for the revenue from the flight. Now, if I do that, Income Tax Act never recognized under the ICD accounting standard, I need to take it to gross value. It is a dispute. Fourth one, I'm not coming to withholding tax. Depreciation. Depreciation should be allowed on the building and plant and machinery. There is a dispute on the building. What is building? What is plant and machinery? Whether a hotel is a building or a plant, that's a Supreme Court judgment. whether an equipment is a building or a plant equipment integrated with a machinery. For example, in a steel industry, you get a civil work, the civil work gets integrated with a furnace plant. Whether you will call the civil work as also a plant and machine, whether the civil work is a building, there is a dispute. So you have enough amalgamation, so there is a dispute. Demerger, there is a dispute. Whether amalgamation, I issue shares and cash together or issue shares without cash together, there is a dispute. Slump sale, what is a slump sale? Still nobody understands. Though Income Tax Act says slump sale is one particular definition, department takes other view on the slump sale. On demerger, department takes a view, you need to have two undertakings before the demerger, while section 219AA does not insist on mandatory provision of two undertakings. It says undertaking should be demerged. Now when you have this much of issues, so the first thing in the prevention of dispute is that there must be a provision to address this prevention of disputes through a mechanism. Either you constitute emerging issue task force or you create a long-term, give a clarification like the Western countries so that it is private ruling, so that it is binding on the tax official. We thought the prevention of disputes should be taken. That is what the TARC report recommended. But unfortunately, Income Tax Act 2025 is silent on prevention of disputes. The assessing officer will continue to do that. The only thing they eliminated is that through the faceless scheme, instead of having an access to the officer, I don't know who is going to deal with me. The person who deals with me should know my industry. If he doesn't know my industry, then I'll have a problem. So I thought that could be addressed. That is prevention of disputes not addressed. Now when your prevention of disputes not addressed, at least you should address a resolution of disputes. The resolution of disputes, what is the basic today? Either you go to CIT appeals, you go to DRP if you have an international tax issue. DRP is nothing but a dispute confirmation panel rather than a resolution panel. I found it DRP as a faster track road for the Income Tax Appellate Tribunal. Because I get the issue decided against me within 9 months, and after 9 months I go to the tribunal. If there is a stay of demand, I go and approach the tribunal for a stay of demand, and tribunal will decide the matter in 2 years. And CIT appeals, God knows when CIT appeals is going to pass the order. In India, I can predict the weather forecast, the rains will come in Bangalore, rains will come in Chennai. But even God cannot predict when the CIT appeals will pass the order in this country. That much of disputes CIT appeals are holding it. And me, PVS and Padam, we have been talking to the government, resolve the CIT appeals matter. They said we don't have the people, they are increasing the strength of the commissioners so that to resolve the disputes. God knows when the CIT appeals will. Though I have been telling my people, Sekar, we got a latest notice asking for submissions. I don't know after submission the appeals will get heard or not. Now you are not addressing any of these dispute resolutions. You are keeping it same. And how do you expect the new Income Tax Act to resolve the dispute? Just because you make the English language simpler, the person will know exclude and include. I know it. In fact, there's a joke about this. One person like me was visiting, those days Trivandrum Zoo was most important. That's the best zoo in those days, in 1980s. A person like me was visiting Trivandrum Zoo. So the zookeeper told me, sir, please go over and shake hands with lion. I said, boss, you want me to live or you want me to die? Sir, don't worry, sir. Lion, just now we fed lion with 7 kgs of meat. And after taking 7 kgs of meat, lion will not hit anybody, lion will not touch anybody. It is proven. I said, what is the history of proven? Sir, it is written in government textbook also, sir. You please read it. So a person like me said, boss, I read it. Did you check whether lion has read it? Like that, I read the Income Tax Act, it's very simple. But my official on the other side should also accept it as a simple and say, no, sir, no dispute. It's not going to happen. So therefore, what has remained is language. Of course, they have made 4 changes. I would like to bring those 4 changes. Of course, PVS and Padam are going to talk about a lot more changes. The second important change, what they did is that the entire chapter 3, what we said, income excluded from total income, the entire chapter 3. They took it away from chapter 3 to a schedule. I'm not joking, you can go through. Agricultural income, at least earlier I know what is agricultural income. Income derived by cultivating A, B, C, D, E, F, G, it will be there. And I used to go to Justice Bhagwati judgment on what is an agricultural income, Bucha F. Gusdar, and I read it. Today my entire agricultural income is coming in schedule. any rent received, any income derived. There's an agricultural income it's an Excel sheet. Huh? I'm not joking. Income Tax Act 2025 uses Excel sheet to the highest level. And there'll be a column mismatch also if you take it across. I don't know which row, which column it is. Agricultural income, any income derived, any income received, any income this thing. So I was jokingly telling Padam, you wrote a great commentary on Income Tax Act. I also want to write commentary on Income Tax Act 1961. But I thought, let the new act come, then I should write a commentary. Now the new act comes, but it's not going to be a commentary on new income tax. It's going to be a commentary only on old Income Tax Act. That is how. Everything is coming in a schedule. Third change. Time limit for passing the order. Earlier section 153 had a various clauses which say the time limit. Now it has come in one table. Before that, what has happened in income tax, we have a concept called previous year and assessment year. That has changed to tax year. Okay, whatever it is. Now, when it comes to the table, they say it is a drafting error. I do not know. The filing of the due date for filing of the returns is expected to be the same dates. However, the time limit for completion of an assessment, this is 1 year from the end of the tax year. That means March 26 is the tax year. You will be filing the return by 30th September 26, and you are expected, the department is expected to complete the end of the first year means March 27. I don't know how they are going to do it, but they say it's a drafting error. I hope the drafting error gets addressed. Time limit. Now TDS. We have been saying simplify the TDS, simplify the TDS. They made it very simple in the form of a table. The rates have not changed, 2% or 4%. Everything is in the same rates. They brought a TDS table. Barring that, I didn't see a great changes in the Income Tax Act. Now, you can ask me, Sekar, is it good or bad? Good for two reasons. My profession, still I'm needed my profession for next 20 years. I was planning retirement before the Income Tax Act. Now I am very confident that my job is safe and secured for next 30 years. So I can practice income tax for next 30 years, no problems. But what is good? There is a honest attempt by the government by which they say that we are going to reduce the number of sections to smaller sections. Fair enough, they made the provisos and explanations redundant and by bringing it across. That's a first good. Honest attempt. Second good, that's one of the reasons I prefer to interact with this government more than any other governments. This government is willing to listen. Whether they change it immediately or change it over a period of time is a matter. That's based upon their own requirements. When we point out it from chamber, when I personally point out this, Sekar, they said is going to go to the Senate or the standing committee, and you give your suggestions. Definitely the standing committee will look into it and will pass wherever it is required. That is, the government is open enough to address the challenges and address the issues. That's the second good. The third good is that, fortunately, you cannot remove the entire judicial jurisprudence developed over a period of time. You cannot nullify the jurisprudence. Fortunately, the jurisprudence is still valid under the new Income Tax Act, in my view. That's a good. What is not good? I explained, but one way most important is whether the new Income Tax Act will lead to reduce the litigation. I'm doubt about it. Unless there is a conscious attempt by the government to reduce the powers of the assessing officers, reduce the discretionary powers, make sure that they implement the law what it was meant to be, disputes will not get resolved. And you need a strong dispute resolution mechanism, which we have been asking for arbitration conciliation under the income tax, which has not come. You need to get that. Second important thing, decriminalization in the Income Tax Act. One of the important pleadings from the industry and the taxpayers is that decriminalize the provisions of the Income Tax Act. Barring 2 or 3 sections, I don't see much decriminalization in the new Income Tax Act. They need to decriminalize the provisions of the Income Tax Act, which they are very conscious about it too. 3, if the Income Tax Act wanted to make simplification of the procedures, that should come through the rules and that should come through the forms, that should come through the notification. That should happen. The hope that I have is first time under the Income Tax Act 1925, though it was brought in of the earlier provisions, there is a lot of references for technology, technology absorption and technology usage of technology. I only hope the government will use it and make sure the Income Tax Act 2025 is a better placed act. Now, last but not that least, I still not lost hopes on this Income Tax Act. While the intent is there, translation of an intent to action takes some time for various reasons. And if there are issues that we need a clarification, we are going to approach the government, this is what we need to do. And I hope some of those recommendations are still need to be part of it. And the government made an attempt to reduce from 700 sections to 500 sections, make it from 360,000 words to 260,000 words. All those things are good. But if it is really intended to get into an action, it should also be understood by the department in the same way as a taxpayer I understand. And to that extent, there must be a conscious effort on both sides. Thank you, gentlemen, for patient hearing. Thanks a lot, and back to Sriram.
Thank you, Sekar. That was really a walk down the memory lane on what started in 77 and what happened in the 80s and 90s. Now I would request Padam sir to give his perspective on much more detail on where he sees the changes, if he spotted some.
Sekar has laid down the background about the entire journey of an attempt to change the Income Tax Act. He's also made a mention that the act was drafted by a committee of bureaucrats. That means there are no professionals involved, there is no judiciary involved, there is no industry involved. Only a set of bureaucrats joining in for the purpose of trying to say, we will simplify the Income Tax Act. What do you mean by simplify the Income Tax Act? As it is, there are a number of provisions in the current Income Tax Act which are not operational. They are there in the statute, but they have no life for the reason that those relevant provisions have ceased to operate from ages now. So I could have removed those. The balance of the language is reasonably well known to me, well structured, well addressed, well deliberated upon. Therefore, I could have, by virtue of the entire process of eliminating some provisions in the Income Tax Act, current law, made it simpler. But I said, no, I need to give some sort of a new dimension to this law concern. And what did I do, therefore? The committee takes great pride in saying that we did this job in 6 months' time. Remarkable. And the government is praising itself to say that it's a wonderful job done in 6 months' time, which needs to be appreciated. There have been attempts in England, 12 years, they have not been able to simplify the law, they had to drop. But we people have done it in 6 months' time. There can't be a better achievement than that. What do you do in that 6 months' time? You reformat it. You reformat it. As Sekar was mentioning, provisions become sections, explanations have been removed, some changes have gone about by saying explanations is not there, explanations are not there. There are only subsections available to us. So that's the process of reformatting the Income Tax Act. But then there is a statement in Hindi, nakal ke liye bhi akal chahiye. You require it. When you're reformatting also, you require to apply your mind. You just cannot say that I'll reformat this in a particular manner, and therefore I think the act is going to be very elegant. So what do I mean by the statement, therefore? That reformatting has led to, in my opinion, new problems, new areas of controversies. And what do I mean by that? I'll give you some examples. There are, and the sections given to me are the charging sections. What are the charging sections? Section 4, Section 5, Section 6, and possibly the various charging sections under the relevant heads of incomes. So I'm confining myself to only these sections concerned to say, are there any problems in these sections? Are you able to notice something new? And if there is something new, Is it going to lead to problems or is it going to lead to little simplification? We are all concerned with scope of total income. That depends on residential status. Therefore, I need to have the examination of how a person is going to be regarded as a resident of. I'm just going to give some examples of this. So the current law says, residence in India of a person shall be determined in the following manner. Residence in India of a person shall be determined in the following manner. Now the law is saying, today the current law is saying, residence of a person in India. The word in India is shifted. Okay, residence of a person in India shall be determined in the following manner. Now, what is the law now trying to say? I'm simplifying this, I'm making it more elegant. But now, if I'm reading law now, I'll say, for you to determine the status of a person concerned, first demonstrate he's in India. Because the law is talking about residence of a person in India. You're not talking about residence in India of a person. That would have been more elegant. That's the current law using it. Now they're changing to say, no, we'll have a better language now in terms of presentation. So they're calling it a statement that it has to be a case of a residence of a person in India. That means if Padan Kincha's residence status has to be examined today, first demonstrate he's in India. If he's not in India, you can't touch him. That's the way I'm going to look at the law. I can't touch him if he's not in India. Now, how do I demonstrate a company is in India? How do I demonstrate a firm is in India? Everybody is a person. Now, therefore, some sort of an innocuous change, so to say, is going to give rise to, in my opinion, some difficulties not required to have been invited at all. I'll give another example. We have business incomes. Section 28 talks about business incomes. The following income shall be chargeable to tax under the head profits and gains of business. First opening portion. The following incomes. First clause says that profits and gains of a business carried on for any time during the previous year. And then we have other sections talking about non-compete fee, import-export licenses, sale of advanced licenses, blah, blah, blah. All of them are there. I want to make it more elegant. So what do I do now? In the new section now, the new act now they're saying, profits and gains of a business carried on by a person at any time during the previous year shall be charged to tax. Okay? Profits and gains of a business carried on by a person for some time during the year or any time during the year shall be chargeable to tax. Subsection 2 says, the following income shall be chargeable to tax under the head profits and gains of business. Now look at the change now. Earlier, the law said the following incomes are chargeable to tax under the head profits and gains of business. They didn't say anything. They had no qualifying condition there. The following income, all that are mentioned there, shall be chargeable to tax as profits and gains of business. No qualifying condition. The qualifying condition was only in the first of the limbs of the various items mentioned to say profits and gains of a business carried on by a person for some time during the previous year. So qualification was there. If you went down, for import licenses, profit and sale of advanced licenses, non-compete fee, non-disclosure fee, there is no mandate that you ought to have been carrying on business for some time during the previous year for these items to be charged to tax. No need. So if I was carrying on a business in 1 year and I've sold my business to Sriram, and I get to, later on, after having ceased my business, I get monies from him towards non-compete, towards non-disclosure, whatever it is. Under the existing law, they could have been brought to tax under the head gains, profits and gains of business for the reason that it is covered there and there's no mandate, no qualifying condition that you ought to have been carrying on business for some time during the previous year. That's not there. Now what they've done now, they're supposed to simplify to say, profits and gains of a business carried on by some time during the year shall be chargeable to tax under the head profits and gains of business, meaning all those items that are listed out in the profits and gains of business section should necessarily be preceded by the carrying on of a business by a person concerned. That means you're going to structure a transaction in a manner that after you cease a business, some incomes will come to you. They're going to make a statement, look here, the qualifying condition is I should have carried on my business for some time during the previous year. I have not done that. Therefore, the charging section fails. If the charging section fails, everything also has to necessarily fail. we have two sections. Now, another example. We have two sections under the Income Tax Act. Section 7 deals with incomes deemed to be received. Whether or not you have received it, the law creates a fiction because Section 5 says income received or deemed to be received. Now, what is that income received? I should necessarily have some money in my pocket to be taxed. Otherwise, it's not income received by me. Law therefore says, no, incomes deemed to be received also shall be a part of a taxable income. And Section 7 is creating a fiction in some situations or circumstances concerned that under these circumstances, the income shall be deemed to have been received by you. More of it is the transfer of provident fund, the recognized or unrecognized provident fund, transfer of balances, all those. But relating to employees' social security transactions. We had Section 8 that deals with dividend taxation under the current law. Dividend declared, distributed, or paid by a company shall be chargeable to tax in the hands of a person who has received the dividends concerned. Now, we have merged these two sections concerned to say incomes deemed to be received by a person shall include both that those were covered under Section 7 of the current Act as well as those covered under Section 8 of the Income Tax Act. Now, dividend declared, therefore, shall be deemed to be income received by you. It's unfortunate. That's not the way it should be. Dividend declared by a company in an AGM, I am yet to receive it. But then can you make a statement that dividend declared by a company shall be deemed to be received by you? No. It cannot be situation concerned. That means, for example, if I am a person who's having dividends, I'm going to offer that as income from other sources concerned. I need to then say, I can adopt the method of accounting to say which year I'm going to offer the dividend. If it's mercantile, in the year of declaration. If it is cash basis of accounting, in the year when I get it. Now, can you make a statement, dividend declared by a company shall be deemed to be income received? Is a little unfortunate. Shouldn't have been done. But then they have merged these two sections now. 7 and 8 have been merged into a current Section 7. And therefore, they're making a statement, the erstwhile Section 8 that dealt with dividend declaration or payment to be taxable in the hands of the shareholder. They decided Section 8 of the current Act did clarify which year is it taxable, both for final dividend as also for interim dividend. The purpose was to identify the year of taxation. What they're now trying to say, not the year of taxation. I'm now going to change that to a situation where it shall be deemed that income shall be deemed to have been received by you the moment it is declared by the AGM. It's going to be a little difficult. It's going to be a little difficult, going to cause problems for a lot of assessors concerned to say, how do I know what is the date of declaration of the dividend by the company concerned for me to offer it for tax? Unfortunate. So this, therefore, trying to simplify the law like this. Now, are you going to do something that is worthwhile, that is better as a product? In my opinion, they have failed in that in a very big manner. I'll give you some other examples. As Sekar was talking about irrespective of, because they are substituting notwithstanding. They have removed the word explanations there. What do you mean by saying I'm removed the word explanations? If we go to 915 today, which is talking about incomes deemed to occur or arise in India when I'm making a payment of interest, there's a permanent establishment of a banking company. That law in relation to permanent establishment of a banking company, that permanent establishment is in India, is clarified by way of an explanation. Is clarified by way of an explanation. That explanation is reformatted as a subsection. There's no great story or merit about it. The same absolutely identical language has been reformatted as a subsection. Now, to say that I've removed all explanations under the Income Tax Act is a statement that doesn't have any merit about it because I've not removed the explanations. I've only removed the title. The explanation remains in substance as it is in the form of a subsection concern. Irrespective of, I've replaced that by notwithstanding. What does it mean, therefore? What does it mean? Irrespective of means what? Regardless of. Despite whatever is there in the contrary in the income tax, despite anything else in the Income Tax Act, it will be irrespective of means regardless of, despite. Now, as far as notwithstanding is concerned, there were two types of phrases used under the Income Tax Act. Notwithstanding anything in the Income Tax Act was one phrase. Notwithstanding anything to the contrary contained in the Income Tax Act was another phrase. There were two phrases. More elegantly, depending on the context and circumstances, they said, notwithstanding anything in the Income Tax Act means I override every other provision of the Act. And there were some situations where they said, notwithstanding anything contained to the contrary under the Income Tax Act. That means this section will prevail over everything else if something is clashing between this section and other section. If there is no clash, the other section will prevail. What's the purpose under the Income Tax Act? Now you are trying to negate all of that by saying, regardless of the context, regardless of the circumstances in which the earlier law was introduced, you're making a statement, I am going to replace, notwithstanding anywhere it comes, regardless of the context in which that earlier terminology was used, I'm going to make a statement that this shall be, irrespective of in all circumstances, regardless of. That means there's going to be a mandatory override of this provision concerned over every other provision of the Income Tax Act. This is not required, not warranted, not therefore some elegant way of looking at the circumstances to say that this shall be the new law. I'll give you some more examples. I'm just going through some examples in terms of the context and in terms of the language concerned. They're looking at languages. Now, you're trying to remove particular words from the existing statute. You're trying to remove. Why you would like to make the law a little more difficult for the taxpayer, therefore you are removing it. It's not a question of simplification. It's a question of making it a little more tougher. But in the process, you have not looked at the entire setting. I'll give you an example now. My residential status is depending upon my physical presence in this country. If I were to go out for employment purposes, I get a liberalized scheme. I can be in India for a little longer duration of time for me to be regarded as a non-resident. If I'm in India for 181 days or less than 181 days, if I've left India for employment purposes, then I'm entitled to be regarded as a non-resident. So anybody, technically, the way we make a statement, anybody who goes before Gandhi Jayanti Day is going to be a non-resident if he goes out of India for employment purposes. The law today is saying, no, I'm going to remove, the current law is saying, if I leave this country for the purposes of employment outside India, the words used are for the purposes of employment. That means I have to demonstrate my intent to take up a job. I may take up a job, I may not get a job ultimately. The offer may have been cancelled therefore. But if I were to go out of the country with an intent to take a job for the purposes of employment, I would have got a liberalized stay. They have removed that word, for the purpose of, they have removed it now. So the law should say, now, the current bill says, I should leave the job for employment. The word for the purpose of is removed. That means I can get a liberalized stay only if I am able to demonstrate that I have taken up a job outside, not otherwise. Okay, fine. That's the way they want to look at it. Word for the purpose of retained elsewhere, I'll come to an example as to why they would like to retain it elsewhere to expand the scope of total income. But here they have removed it out. But rightly or wrongly, they have not understood the entire context or setting. For employment in any year. The words used today are for employment in any year. Now, I have gone out of this country for employment in year 1. I get a liberalized stay. I have demonstrated my employment in overseas location in that year, therefore I get a liberalized stay. Now coming to second year, third year, fourth year, fifth year, I have to come back and find out my residential status. The current law says you will get the liberalized stay of 182 days for the year of where you've gone out of the country for the purpose of employment. They use the word for that year in which you have gone out of the country. You leave this country for the purpose of employment. In that year only, you'll be able to get the benefit of an extended stay. Next year, I don't give you that benefit because this benefit of extended stay is only for that year in which you leave the country for the purpose of employment. Now the law is not using that word. They say for employment in any year. The word that is replaced by any year. So in the year second, third, fourth, fifth, sixth year, can I make a statement, I went for employment in that year, therefore I should continue to get a liberalized stay this year? It's going to be a difficult issue. So therefore, the change to say that they have made the law more elegant, more simpler, it's more easier to understand, has to have had some application of mind to the context in which the law is sought to be amended, the way in which the settings are coming about, the way in which the drafting comes about. Only then you would have made a statement that the law has been more elegant, more simplified. Otherwise, today, it's not happening in that manner at all. In the case of royalty, I'll give an example of two changes, therefore. Again, incomes deemed to occur or rise in this country. So, when I make a payment, a resident makes a payment of royalty to a non-resident, it is going to be taxed in India invariably, unless you fall in the exception to say, the exceptions are in relation to a business that I'm carrying on outside the country, the royalty should have been used there or utilized there, or in relation to making or earning an income from a source outside of India. Otherwise, every royalty paid by me is deemed to occur or rise in this country because I'm a resident of this country. Any non-resident will therefore be exposed to a tax liability in India because the payer is a resident of this country concerned. early law earlier said was that it has to be utilized outside of India for what? For the purpose of a business outside of India. The word again, for the purpose of removed here also. So I have to now demonstrate, for me to come under the exception of royalty, it has to be a case where the patent or the trademark or the technology or know-how is utilized in a business outside of India. I just don't have to demonstrate for the purpose. I may utilize it tomorrow. I have an intent of acquiring it for the purpose of utilizing for a business. That intent is not going to help you out. You need to necessarily say that it is demonstrably used by you in a business carried on by you outside of India. Only then you will get the exemption. Therefore, they have narrowed down the exemption. But when it comes to a non-resident paying royalty to another non-resident, he is the recipient non-resident is going to be charged to tax in India. Income is deemed to accrue or arise in India if the recipient non-resident has an intent of utilizing that technology in a business that is going to carry on in India. For him, for the purpose of is there, because they would like to expand the scope of total income for that non-resident concern. Absolutely fine. Even that is okay. But what they've gone and done now, look at the way in which they've slipped in the language again. One non-resident making a payment of royalty to another non-resident. Why is he making it now? Because that recipient non-resident has a source of income outside of this country concerned. He has a source of income outside the country. So the non-resident payer is outside the country, recipient is outside the country, and the payer has a source of income outside the country. Technically, therefore, only if the royalty is used for the purpose of a business in India or for the purpose of making an income from a source in India, it's deemed to accrue or arise in India when two non-residents are involved. But the drafting today is making a statement that one non-resident making a payment to another non-resident for the purpose of income from a source outside of India shall be deemed to accrue or arise in India. It's unfortunate. Two non-residents in relation to a transaction of a source outside of India shall be deemed to accrue or arise in India is extremely an unfortunate statement concern. There's a slippage in the language. So even in the formatting, even in the reformatting, they're not applied their mind. They are now therefore making a statement from a source outside of India is deemed to accrue or arise in India. That's going to be a difficult job at all. So therefore, the question of reformatting, therefore, gives rise to a number of problems under the statute concern. Therefore, we are looking at sections 4, 5, 6, and 9. I'll come to some of the examples now. There is an aspect of additional tax. Section 4 is the charging section. We normally say where the Finance Act enacts income tax as mentioned in the Finance Act, or that may be mentioned, at that rate, at those rates shall be charged to tax. Same language is copied in the new bill, but then they have now added additional tax by whatever name called. So income tax including additional tax. Now, earlier words were income tax including additional tax. Now what they're saying is income tax including additional tax by whatever name called. Those are the words they've added. Now what do you mean by whatever name called? What are you going to call additional tax? Are you going to call a cess an additional tax? Are you going to call surcharge an additional tax? The answer is possibly yes. So they'll all get covered under the Income Tax Act, and therefore, while for the purpose of understanding the maximum marginal rate of tax, you may have difficulties in understanding what shall be the maximum marginal rate of tax for the reason that they've added additional tax by whatever name called. But interestingly, they've said additional tax by whatever name called as provided for in this act. As provided for in this act. Now, in this act is the Income Tax Act. Normally, we have the additional taxes by surcharge, cess, and everything else in the Finance Act of every year, not in the Income Tax Act. We don't have a levy of the surcharge and cess in the Income Tax Act. Now, therefore, they are making a statement, additional tax by whatever name called, expanding it, but that which is levied under this act. Now, they have not applied their mind properly again. They should have then made a statement either in this act or in the Finance Act. They have not done that. The way the wordings today are, therefore, it shall be additional tax that is levied under the new act only, and therefore there cannot be a reference to any additional tax levied under the Finance Act itself. If you go to section 6, we have seen certain aspects concerned. One more change there. I'll give you some examples. These are all situations where you need to be careful about so many changes that are happening. And a conspectus of all of this, if you stay down very closely, you will find a lot of other problems in terms of the language. But I'll give another example. If you're looking at a residency status of a person concerned, you're looking at he has to be his presence in India for so and so reason. Now they're talking about a stateless person. They want to make him a person who is a resident in India. They may be therefore giving him a status of a not ordinarily resident, but first thing is a person who is not a resident of India, who is not a resident of any other country, therefore is not liable to be taxed anywhere. He is a nomad, global nomad. They would like to make him a resident of India if he is a citizen of India. So every citizen of India, like the US law, we are trying to bring in that concept here, he shall be deemed to be a resident of India. If he is not a resident of India, I'm not bothered. If he is not a resident anywhere else also, that's an important qualifying condition to be satisfied. He'll then be deemed to be a resident of India. For that purpose, his income from foreign sources or income from Indian sources was the concept. They were now making a statement under the current law that his total income should be first computed. Then from that exclude the foreign incomes, those incomes that are accruing or arising outside of India, you exclude that. So if the total income is 25 lakh of rupees and income that are accruing or arising outside of India and those don't get pulled into India from by section 9, then you will have to exclude those incomes. If those incomes are 12 lakhs, then you say 12 lakhs have to be excluded, the balance is 13 lakhs, this income is less than 15 lakhs, the law will not apply. So you're now looking at the total income of a person concerned, and from the total income, you are excluding certain categories of incomes concerned. That means there were some peculiar incomes that were added to my income because of clubbing provision. Whatever reason, my wife is outside, she's a non-resident, she has an income, that income from an Indian asset that needs to be clubbed in my income. So there was some clubbing provisions under which the incomes were aggregated to my income and they formed part of my total income, from which I had to exclude those incomes that were accruing or arising outside of India. So the exercise under the current law mandates that you arrive at the total income of a person concerned and then exclude incomes outside the country. They've forgotten the word total income in this context under the new law. They've forgotten that. They've only said whose incomes from Indian sources, not total income. That means I have to demonstrate it's my own income, not anybody else's income. My trust's income, my beneficiary's income, my wife's income, my minor child's income, they are not part of my sources of income, although they are a part of my total income. There's a difference between income from my own sources and income that constitute my total income from whatever sources the law may provide for. The reference to total income is omitted. They have forgotten about that. Therefore, what the law says is your income should be more than 15 lakhs and those should be directly derived by you from Indian sources. Only then you will be called as a not ordinarily resident, or you'll be called as classified as a resident first, then given the classification of a not ordinarily resident. And therefore, they have missed the situation of the total income component of income from foreign sources when they're trying to define your total income for the purpose of assessing whether you're a resident in India or you're a non-resident in India. They have made a very interesting reference to say that you're a resident of India if you are in India for 182 days more, condition number A. Condition number B is you are in India for a period of 365 days in the preceding 4 years plus 60 days in that year. So A and B are there. Now, they have now said this B will not apply. B will not apply in particular circumstances. Only A should apply. That's what their intent is. Now, what they have identified situations as to under what circumstances this condition of B will not apply. They are given two circumstances. One, of a person who is leaving this country for the purpose of employment. That word for the purpose is gone now. Who leaves India for employment. We've already seen that. We have already seen the difficulty of the word any year. But in this case concerned, the clause B will not apply. Therefore, you go back to the clause A only to say, hey, it is a case where she has to be in India for more than 182 days to be called as a resident. This is one exemption. Second is an interesting exemption where a person is outside of India who comes on a visit to India. Who is a person, an Indian citizen or a person of Indian origin who being outside this country comes on a visit to this country. In that situation concerned also, he will get a liberalized stay. There the law is now trying to say, in case of this person also who is staying outside, who comes on a visit to India, in that situation also, B shall not apply. B shall not apply. Very interesting. Look at the law now. They say this clause B shall not apply. Means what? You don't look at B at all. You only look at A to say, was he in India for a period of more than 182 days? Who? A person who is outside of India comes on a visit to India. By virtue of the current 6 subsection 3 under the new bill concerned, they say clause B will not apply. Now, 6 subsection 4 is now saying, in the case of a person who comes on a visit to India, he shall be regarded as a resident if the income is going to be more than 15 lakhs of rupees. There is 6 subsection 4. Now, there is therefore a inconsistency between 6 subsection 3, 6 subsection 4. A person who is outside of India, coming on a visit to India, will not be considering clause B at all is one mandate. No B is to be applied to him. Only look at A only. 6.4 is now saying, in the case of a person who is coming on a visit to India, he shall be regarded as a resident of India if his income is more than 15 lakhs and he stays more than 120 days up to 182 days. Now, there is an inconsistency. They should have provided in 6 subsection 4 that what? Notwithstanding anything contained. They can't do that now. They want to avoid that language. They want to avoid that language. They can't make that statement now. Notwithstanding anything contained in the preceding section, if this fellow were to have income more than 15 lakhs, and then he'll be a resident if he's in India for more than 120 days. They've not done that. They said, we will not use the word notwithstanding. Now, therefore, you have 2 clauses now. One clause says, this clause does not apply. Other clause says, it will apply provided some conditions are satisfied. Now, how do you resolve this dispute now? How do you resolve the dispute? Once saying that this clause doesn't apply here. How do you resolve the dispute now? To say, I'm going to be steadfast in I'm not using the word notwithstanding, this is going to cause difficulties. They could have, irrespective of what's happening there, it should have been something like that. No, so this is a case where, therefore, you're looking at situations where you are having difficulty. The same difficulty that we saw in employment conditions also there on a visit. Person being outside of India comes on a visit to India in any year. That's what the law is saying. In any year. Then he'll have a liberalized stay. The clause B will not apply to him. He'll have a liberalized stay in this country concerned. In any year. Not necessarily in the year in which he's coming about, you're looking at it. That means he comes on a visit to this country in March 26 ending or March 27 ending. That's okay, I understand. But then, because he has shown that he has come on a visit to India in March 27, can I apply the same law to him for March 28, March 29, March 30? Even though when he comes back permanently, he's not coming on a visit to India, but he makes a statement, look here, I came once upon a time to this country concerned, therefore I should have the benefit of a liberalized stay. It's going to be a difficult issue again. We have incomes deemed to occur arise in this country. We had a lot of controversy now in relation to the capital asset transfer, Vodafone's case that Sekar was referring to. Because the words through or from were only qualifying preceding assets. In relation to capital asset, the law was saying through the transfer of the capital asset. But today what they've done now is that they were used to common words, through or from, qualifying all limbs of the contents of section 9(1). Through or from a business connection, through or from an asset or a source of income in India, through or from the property in India, through or from the transfer of a capital asset in India. They've done all of that. Therefore, the controversy that was there in terms of the Vodafone type of decision concern possibly may not survive because of the words from. But they've gone ahead, we've seen some royalty aspects concerned to say that they have expanded the word royalty in a particular manner for the purpose of removed out incomes from outside of India are all being taxed here. So there are certain amendments there. But more important amendment there is, now they are trying to make a statement that royalty shall include transfer of all or any rights or grant of any rights also, including granting of a license. So they are using 3 words now. Transfer of all rights, granting of all rights, all or any rights, including granting of a license. That is there in relation to not only copyright that deals with largely software, but also deals with patent, invention, model, design, secret formula process. Therefore, 9(1) in the current understanding has limbs 1, 2, 3, 4 that deals with patent, invention, model, design, secret formula. And limb 5 deals with copyrights concerned. Copyrights was largely associated with software ones. In relation to copyright, there's a controversy whether granting of a license shall tantamount to royalty. Supreme Court came to the rescue of the SSA concerned more in the context of the treaty law by saying that the treaty understanding of what constitutes royalty in relation to software means it cannot be a transfer of a copyrighted article, it has to be a transfer of a copyright right. Section 14 of the copyright law, which are the rights enumerated there, they should originate from the owner concerned and move and get lodged in the hands of the licensee concerned. Therefore, that's the law in relation to the copyright understanding under the treaty law. After the Supreme Court decision, they brought an explanation 4 as it is to say that the grant the use of a copyright, use of a computer software program should tantamount to as falling within the aspect of transfer of all or any rights, therefore constituting royalty. But that amendment was meaningless to the extent that the treaty definition had not changed. The treaty definition still remains the same, and therefore, if you were to therefore look at the treaty, you will always make a statement that the treaty is already more beneficial to me, the definition is narrower there, as a result of which, therefore, the expanded definition under the Income Tax Act should not be of any avail. They're now trying to make a statement that a transfer of all or any rights, including granting of a license, including grant of the rights to use a copyright also, is going to be a royalty. Now, what do you mean by that? Is grant, therefore, what do you mean by grant? Is allow. Allow what? Allow what? The word grant is coming in the company of transfer. So I'm going to make a statement that, look here, the word grant comes in the company of transfer, therefore they derive meaning from each other. Therefore, grant should take a color similar to the transfer. Unless, therefore, there is a transfer, there should not be satisfaction of the word grant because of the aspect of these two colloquial words coming together should have some sort of a common understanding or common meaning. If that were to be the proposition, then the deployment of the word grant may not achieve much because it is being used along with or coterminous to the word transfer, which has some known meaning, understood meaning, and settled meaning under the tax laws concerned. So the word grant of a license may not necessarily tantamount to an expansion that the lawmakers are feeling that it will try and expand concern. So these are, therefore, if you go into what we, therefore, Sekar is mentioning what they have done. What I have done, therefore, is looked at the old law, look at the current law, try to compare word by word, and then try and understand as to what is the difference between the current law, what they're trying to use as the terminology, what is there in the new law, what is the terminology being used, is there a shift? There is, in many situations concerned, you are finding a lot of shift concerned. And therefore, there could be some areas, I have not made a reference to those areas concerned, managing wholly or substantially the affairs of the company concerned in relation to permanent establishment, managing substantially or wholly the affairs concerned. So they're trying to rejig figures and rejig phrases concerned. In my opinion, just because they're rejigging, there could be a substantial difference in the ultimate effect or impact, and the government has not possibly understood these changes concerned. Ideally, there should have been an explanatory memorandum below this changes concerned, that this is the change we are effecting to this particular section concerned. The change is because of the following reason. What is the reason as to change the terminology concerned? That explanatory memorandum could have helped. But what such, as Sekar said, 6 months' time, give it to bureaucrats, leave it to them, they're going to rejig, reformat, and they say it's a wonderful document coming about it. Nobody has had the time to understand the impact of the small changes concerned. But these changes could have significant impact in our everyday practice, and as Sekar says, with this type of drafting concern, 20 years of life is assured for all of us, because the FM statement to say that it's a wonderful draft, it's a wonderful simplified way of looking at things, it will reduce litigation, it will ease compliance, it will help business in this country concerned, the ease of doing business, are all very grandiose statements. They necessarily have to translate into reality, which reality is not reflected in this current draft of the bill concerned. Thank you all very much.
Thank you, sir. I mean, that's such a wonderful 45 minutes that you've taken us through the changes, right? I think oftentimes we say, be careful what you ask for. I think as taxpayers, we should have probably not asked for simplification if this is the result of what we get, right? And probably from comma and full stop, the litigations are probably going to where the word is placed. Is it in person in India, or in India person is going to be the new dispute, is what you're given a view. Probably the disputes will move from comma to the placing of the words. And thank you so much for your wonderful session, all the examples that all of us could relate to. With that, I would request Mr. P.V. Srinivasan to come and give his views. So one of the asks of the taxpayers has always been reforms on the tax administration, more on the law itself. PVS, your views on whether the laws address the taxpayers' ask, or is it just that now the disputes is going to move from probably comma and full stop replacement of words.
So here is one illustration that many people wanted simplification of income tax, an impossibility actually. No country has a simple income tax act. It's impossible to have an income tax which is simple. But now we have a document which is portrayed to be simple. During my younger days, when I was in school, my father used to tell me a story that village had a lot of robbers. And how to keep the village safe? They were trying to find out somebody. One suggestion came that give the keys to the one robber, the village will be safe. So likewise, give the drafting to the very same administration which is trying to find out difficulties with the existing act. Let them come with a draft. They come out with a draft. Now the obligation of making it simple, it is on the taxpayers or it's on the administration. That difficulty is what has been posed today. Whether the obligation to keep it simple will be on the administration, then this act will work. If the obligation is on the assessees to keep it simple, this will not work. This is going to have a lot of difficulties, and therefore the intent of keeping it simple will have to immediately need administrative reforms. My session is on administration, that's why I picked it on this context. What are the changes in administration? Is there something which is redeeming? We can say these are nice initiatives which have come about. At a very high level, say nothing. I can end my session almost with that statement without speaking much more, saying that there's nothing in the administration which we have to look for and say that this is one step which the government has taken which is really redeeming and it is something which is welcome. And what was missing in the earlier act, something has been thought through and a higher onus has been taken on the administration which was not there in the government. That is missing. In fact, if at all there was any change required in the act, it was in the administration aspect of the act and not in the legal provisions of the act, which was always there. Even today, if you give me the act, I will interpret it. But in administration certainty, it was the government onus to put it across that we will administer the act in a particular way with discipline. That is missing back. Let me give one or two aspects. I have got fairly an exhaustive presentation. I'll speak for about half an hour to ensure that I don't cross the limit, but enough to speak for half an hour. But what I wanted to possibly say is that today, when you want to answer, what do you file an income return for? You file a return for the income. What is income? Income is stated in this act, and it also says it also includes items which are not included here but included elsewhere in the 1961 Act. So essentially, every assessee, wherever he goes, he must carry not only the new Income Tax Act, which will come into force whenever it's passed, but he must also carry the old Income Tax Act, because he must always demonstrate that this income which is listed here is either there is something else which is not listed in the 1961 Act and which is listed here only. That kind of a comparison will be constantly required. So the first flaw, that the income itself is including the income of both the acts. Number one is the inclusive definition, both places. Now you have got an expansion that the 1961 also will be looked at. That's the first flaw which I will look at it. So what do I file a return for? So every assessee must have a comprehensive understanding of income. The second one is very common that many of us may have a refund. When do you file a refund? Suppose I have a refund to claim. A refund itself should be understood that the charging is not there. There is no charging section. The tax paid is something which is beyond the charging section. Therefore, it is refundable to you. If that were to be there, then you file a return. You could have filed it belatedly also, but still you claim a refund and it should be granted to you. The new Act provides that you shall file the return on or before the due date. That it shall be filed. If you don't file it on or before the due date, there can be a technicality that your refund will be denied to you. You are an assessee, you are claiming a refund. Can there be a mandate that the refund will not be granted if it's not filed within the due date? That mandate is sought to be brought in. In a way, if I have to judge it from a constitutional angle, such a provision is illegal, is beyond constitution. You cannot levy a tax which is not mandated by law. The charge is not there. That's why the refund has arisen. If there had been a charge, it would not have arisen. Because there is no charge, the refund has arisen and therefore should be granted. So it's without authority of law. It cannot be confiscated because I have not filed a return within the due date. That's the first fallacy. I thought I'll make it out. Then there are, Sekar did talk about Excel sheets, tables and other things. I thought only Microsoft made a lot of money with Excel. Now tax professionals also will make a lot of money with the Excel sheet. There's an Excel sheet for time limit, for completion of assessments, etc. 286 is the new section which has come. And we can see that one advantage of an Excel is that you are visited with a situation, you come over to the column, find out what is the result for you, and then it's more like seeing a CA result. See, check your number, see whether you are passed, your number is there, you are not there, you are not there, that kind of thing, you know. So here's a very clear kind of a mandate that anybody can understand what's the limitation. So some positives out of it. Section 288, which is equivalent to 155, is also another Excel sheet. That what are the circumstances in which an old order can be revisited. That kind of a provision has been come. These are the Excel sheets which you can look at. The modern day users of Excel, they will find it convenient. Old timers will find it very difficult because we are used to a language of comprehension. But this alignment and all will take place very soon. I don't see much of a difficulty. That will. One important change which is missing, which all of us will look at it, is that in the repeals and savings section, there is nothing protected that the circulars and interpretations which have been issued under the old act, they will be valid for the new act. So if you are relying on an old circular, for administration purpose also, these are all part of administration. Even a circular can be an administrative circular. If you are relying on a circular, that circular, unless it is again reproduced under the new act later on, which may not happen on day one certainly, you may find that those circulars are no more applicable to you because you have to persuade the courts, seeing that what the circular contain must essentially be applicable here also. Another effort is required. Otherwise, the circulars will go a little non-applicable. There is now few things positive. I thought we must take it. If you have got an APA agreement, advanced pricing agreement, agreements which are concluded under the old act will continue to be enforced under the new act. It uses the word agreement. I presume that advanced pricing agreement is also an agreement, and therefore it can be continued. One flaw I found out, anybody can correct it if you have read it differently. Normally the TDS provisions, the earlier TDS provision is that if you have a TDS, it is refundable or adjustable in the very same year. It cannot be carried over. Then the law was amended to say that TDS once deducted, it is deducted. You cannot claim a refund. You can claim a refund only if you have a refund in the computation. But otherwise it will carry it over to the year in which you offer the income. So if you have got 100 rupees of income and 50 is what you are offering in the first year and the next 50 you are offering in the next year, TDS also will get divided into half and half, and part of it can be claimed as a credit and part of it can be claimed in the next year. I have not found one transition provision. If there's a TDS under the old law and it needs to be carried over to the subsequent law because the act comes into force, that TDS which was deducted under the 1961 act, whether the credit will be available for the subsequent act. That provision I have not been able to find. If somebody has found it, I will learn from him and close it. There are nice provisions. If you have got a MAT credit under the old law, it can be carried over. Law specifically provides for that. There are no restrictions on the powers of the EU. Now I will come to some aspects which are very important, which many companies have opted for Section 115BAA, which is a company, any company, can choose to go under this regime that you forego many of the incentives, deductions and all, and pay a 22% tax, which together with surcharge and all will translate to about 25%. That scheme is available under the 1961 Act, and many companies have opted for it because they find it lower rate of tax and they don't have many incentives to claim, therefore they have opted for it. 2 incentive deductions were allowed for computing the profits and gains of this company. One was regarding 80JJA, which is labor related, employment related. The second was regarding intercorporate dividend. So a company getting 80 JJA deduction could have deducted even under 115 BBA. It could have also deducted the ATM deduction. So 2 deductions were protected, all other deductions were taken away. These 2 deductions have been protected under 115 BBA. But the section 200, which is the equivalent of this section, protects only one. It protects 80 JJA equivalent section. It does not protect ATM. So if you are an investment company or you are a company which is receiving a large amount of dividend income, you may suddenly find that the 22% tax will go up because the amount of income itself has gone up. Because the deduction which was available for intercorporate dividend, that has gone away now. You will not get that, is the way the section is today worded. So one can say these are omissions in drafting, but I do not know. If it was only cut and paste job with a reformatting, an omission could have been made or is really intended. As Padam sir was saying, if there's an explanation memorandum is normally added, if an act is amended, if an altogether new act is presented, no explanation memorandum comes along with it. What comes is a statement of objects and intent. That's all. You say new act is to intend to make simplification and nothing more. So you don't get an explanatory memorandum as to why a particular omission is there, why a particular inclusion is there. That is not available today. The most difficult part, one is not able to comprehend. Almost there is furor that there is no disposal of appeal by the Commissioner of Appeals. It is being talked everywhere. Even the Honorable Finance Minister sometimes feels possibly embarrassed that there is no disposal at all for quite some time. They have tried every trick in their hat. They have tried to say, okay, smaller cases will be attended to by a joint commissioner. If there are only intimations, adjustments, that will be done by different people. Many things have been attempted, but there are no disposals. In fact, there are no disposals at all of material kind for the last 4 or 5 years. I don't think appeals have been disposed to the extent that you can find the tribunal often winds up with a hearing by 1 o'clock. There is no volume. They don't, if the institutions have been created for redressal of disputes, but if they don't have capacity, nothing emerges from the lower stream. What will be the higher stream doing? They will find it they are in fact using substantial resources. I can say there is nothing at all for early disposal of appeal. The current act says the Commissioner of Appeals may endeavor to dispose of an appeal within 1 year. Very same act, Commissioner of Appeals may use. Now this persuasion to a Commissioner of Appeals who was not disposed for 4 or 5 years, this may could have been taken as a shall if they intended to. But once you know they don't intend so, you have to possibly mandate something more. How will you mandate that if they don't dispose within 2 years, then that appeal shall not be heard by that appellate authority. It shall be heard by some other appellate authority of a higher forum. Some escalation should have happened so that there could have been a compulsion to feel that they discharge the job and onus, which is, appeal is a very important right for an assessee. But for a right like that, you will not find that the Income Tax Act cannot function at all without an appellate right. If that appellate right is not frustrated by, you are allowed to file appeal, but there is no disposal, is equivalent to frustrating the very same effect which you have. So I think not doing anything on the Commissioner of Appeals, they may have some plan at the back end. I am not sure, but on law, there is nothing mandating them to clear anything. In fact, I can see quite a few high courts have come down heavily. The Bombay High Court has come down heavily in some cases. The Gujarat High Court has called for an affidavit from the government. Please place an affidavit as to what are the cases which are pending with you. In one of the affidavits, the Gujarat High Court says that the total outstanding appeals are about 5 lakhs 80 or something, with 14 lakh crores of outstanding demand. That's the kind of staggering numbers of there which are there in the disputed appeals. That's the kind of disputes which assessees have country. Out of 14 lakh crores, if 20% is the for pre-deposit amounts, you can imagine what kind of a burden has been cast on the assessees who have gone in appeal over a period of time. 20% out of 14 lakh crores has been pre-deposited is the presumption on which we should go, that they have deposited that money and they are contesting. 4 years, no disposal. that will be a huge burden on the system. The government also may look at it differently, that 14 lakh crores is undecided, and assuming that they are going to win most of the cases, what a revenue certainty they would have got it, can be the other way of looking at it. So one disappointment, which everybody, possibly wherever we get an opportunity, we have to sell that this appellate disposal mechanism should be little more hardened in the law, hard-coded. Unless it's hard-coded, there's nothing going to come as far as the appeals are concerned. There is no change in the orders which can be appealed before the commissioner. Those orders which are today, which are appealable orders, you can file an appeal before a commissioner only on certain aspects. But so those orders which can be appealable are listed today. There are no changes materially. Possibly one tonnage tax scheme, which is there in the current act, has been omitted in the new act. But I don't know how many people are going to be affected by it. But broadly, there is no change in the orders which can be appealed. There are certain restrictions when an appeal cannot be filed at all. Suppose you have filed a return and you have not paid the tax, which you are admitted in the return, then an appeal cannot be admitted. Yeah, appeal can be filed, but it will not be admitted at all. So your own return income, the tax which you are admitted, that cannot be admitted. Contrary, assuming that you have not filed a return at all, but you have paid an advance tax equal to your income, then also it need not be admitted. There are certain exceptions that you bring good and sufficient reason for not filing a return, etc., then the appeal will be admitted, and so on and so forth. The word good and sufficient reason is a legally explained terminology. It is used in many places in the Act. Good and sufficient has to be legally tested. In the sense, it is not a mere, it's a fact and law together. Suppose I say I was unwell and therefore I could not file a return. Maybe it will be a good and sufficient reason. Suppose I say I forgot. The omission is same, that you failed to file a return. But assuming that I say I forgot, that is treated as negligence. Yeah, negligence is not condoned, but the circumstances which allows non-filing in certain cases may be accepted. So the good and sufficient reason has a lot of judicial precedents which have come about over a period of time. All those will get now substituted. Now you have to find only reasons are used. Whether it is a good change or it's a bad change, I do not know. But again, whether good and sufficient reasons means the same thing as reasons. In my judicial understanding, they don't. They have different scope, and reasons may be a little, sometimes, I don't know whether it will be liberal or strict, but I find the two phrases are different, and therefore it requires a different appreciation. As far as DRP is concerned, today also they have to go through a lot of material. What are the things they must pursue? A DRP, Dispute Resolution Panel. There are many things which are saying you must go through the order. You must look at these evidences. There are 7 classes which are inserted. These are the things the DRP shall look at it before issuing directions which the AO is required to follow. Today they have removed those classes. Instead of saying that the DRP must in writing specify the points of determination's reasons. A little more sharper than what it was in the 1961 Act. I will call it a positive change, because today they have to specify the points and of determination. What are the things they have looked at, and they must assign the reasons for looking at it. Assuming that I cite a Karnataka High Court decision to them and say this precedent is binding on you, possibly they have to cite a reason that why they are not following. It is not possible that they can ignore a decision and then go ahead. I find that this particular change may be a positive one in the bill compared to the 1961 Act, because they have to their directions must be in writing, which is there today also. It must specify the points of determination and reasons. So you may say what are the things they have looked at and what are the points they have looked at, what is the reason they are passing these directions, and the reasons for that. I think this is a little more comprehensive. I find that this may be a good change to have it from that angle. Explain what is the most worrying thing for a assessee. Now, certainly a corporate assessee, if not an individual assessee. Reassessment. you show by raise hands any company which says that they are current with assessment, they don't have any assessment, reassessment pending, it will be a very rare exception. Because automatically every assessment is thought to be reassessed in some way or the other. The norm is that the department has a mindset that reassessment is a norm rather than exception. That's the kind of system they have got it. Is there a change in the reassessment? Let us note there are 2 new clauses which have been added to expand the scope of information. For reassessment, there's a requirement that there must be an information. That information is now broadened to include 2 more clauses. That means the scope for reassessment has broadened now compared to the earlier time. If the earlier you had 7 classes, now you have got 9 classes, and therefore you have to look at 2 more classes. What are the 2 classes which have been added? One is that I'm just reading it because mind does not absorb the entire language the way it used to be in the earlier act. We have to use the tools of information for use order by any authority under the act or reference or revision by a court in any proceeding under any other law. See, now you understand, earlier your proceedings were restricted to your act. Now it can travel to any other act. So any other proceedings under any other act can possibly be a reason for reassessment. And of course, the GAR also, there's some, I thought it was always there. I find many commentaries today which saying that GAR also, because GAR means it's an arrangement. Yeah, arrangement can travel beyond 1 year. So an assessment also, when matter is referred to the GAR panel and is finally adjudicated, it will travel to many years. And therefore, there can be reassessment for all those years. So one more for reassessment means the scope for exception. One very important thing, Padam sir will possibly have a field time because reassessment is the most contested in the tribunals and the high courts. And he is the one who is very regular in tribunal, and I know the kind of precedents he has set under the current law, he will set new precedents under the new law also if it comes. It says, a reassessment is picked up for escape under assessment. Suppose I missed to include, say, 100 rupees as my income. According to me, it's not includable. I say it's not includable. I say it's not my income, whatever be the case, but it says not includable, but somehow the department contests that this is includable. They send a notice to me that this is your income, this has escaped your assessment, therefore it's assessable. I successfully contest today that this 100 is not includable. I demonstrate to the authority that this 100 cannot be included in mine, and this is not my income for whatever reason. There is one interpretation which says that there cannot be any further assessment. The item which is picked up for reassessment should be included in the income. If it is included in the income, many other items which are detected during that reassessment process can also be added. That 100 must be included. In addition, many other things can be included because while doing reassessment, they may find many other items of income which are missing. So an explanation was added that if there is an escape of income, it need not restrict itself to only that income. Many other items of income can also be added. Is the way the current law, I would read it one way. The new law, it seems to look at saying that whether or not you have got the income which is escaping assessment can be, need not be taxed at all. You can have only the new items of assessment which can take place. Now it becomes a very simple tool for the department to raise anything as escapement of his income, knowing that it may fail also for a moment, assuming that it fails, but in the process of reassessment, they find many other things which they want to assess. They may want to assess it and close it. The item for which they selected it for reassessment, that fails, but many other items qualify for whatever reason, and therefore you have a reassessment not because the item which was chosen was the new law needs to be different. So why I am saying, when an explanation is elevated to a subsection, explanation operates within the domain of the main section. You have to read the main section and read the explanation in a way that the main section operation is kept in mind. But when it's elevated to a subsection has a authority which is slightly different from an explanation. That authority, everywhere you read it, you find that it is not the same as the way you would look at it. It can be read differently. You will find that this reading is going to be slightly a different problem. So there is no sanction required. There are certain circumstances where, in fact, today, if something has to be added, a sanction is required for certain aspects. For here, no sanction is required. These are the expansions which have taken place. I would be worried with the new reassessment provisions compared to what it is there in the current law today. Then there is a lower withholding tax. The current act provides for nil withholding. That means you can get a zero withholding also if you feel, suppose a loss company is there. It is perpetually incurring losses and it has got carry forward losses, everything is there. It can go to the assessing authority and make an application under 197 and say, mine is loss incurring. I am unlikely to have a profit, total income which is going to be taxable. Please give me a net withholding tax and therefore furnish your details, get your nil withholding tax. The new act does not provide nil withholding tax. It provides lower withholding tax. Whether lower and nil, both are used in the 1961 Act, but the bill uses only lower withholding tax. So whether you will not get a nil withholding at all under any circumstances remains to be looked at later on. Of course, we are all professionals, we know how to argue in courts also. You will say lower includes zero. Zero is also a rate. You cannot ignore. All those are our arguments. What the law already clarified is slightly diluted. Repeal and savings positions, one of the things which is very important, even I find in the GST Act also, repeals and savings are not as well conceived as it should be. There is always a gap between what should be stated. It can be a little more detailed. I said circulars and interpretations are not stated. If they are stated that all the circulars and interpretations which are there under the old law, corresponding sections it will apply in the new law, it would have possibly helped the cost better. They are not stated. Now here also, you can say that the cutoff point is going to be very difficult. It says the bill is proposed to take effect from 1st April 2026 and is applicable from tax year 26-27. The existing act also will continue to operate in its own terms. They have not, actually there is no death of the existing act. Is the act, two administrations, two things will go parallel is the way the act is now corrected. The old provisions will continue to apply for the old law, new provisions will continue to apply for the new law, new years. It looks slightly a cumbersome affair. It is not a transition. It is actually creating age of two income tax regimes. I have not seen 1922 Act continue in 1961 Act to the extent the 61 Act will continue in the 25 Act whenever it becomes. I find this lingering effect will remain for a long, long time, at least 20 years or something, before it can find that the old Act is altogether forgotten and the new Act is only remembered. I think 20 years of two litigants, all of them were counting only the bill for their businesses. I am counting two businesses actually. The last one is Sekar did talk about decriminalization. See, all these are economic offenses. You have income included, not included. You have a lot of information. I have a lot of information. You throw information at me. I admit, I close it. That's an assessment concluded. Whether it should involve some kind of criminal prosecutions and other things. There are many countries will say economic offenses because it is only a matter of information discovery. Many are not subject to criminalization. So your prosecutions and other things are abatable. They are not prosecutable. That's the kind many countries look at it. Our laws also need a little, they try to do some kind of a decriminalization in some of the acts. But income tax has not done much. The 276CCC with a new section says somewhat it leans to say that new law has decriminalized the prosecution provision somewhat. I will say that it's not fully, but somewhat decriminalization has been attempted here. But normally, a penalty is the maximum a person would suffer for a violation under particular provisions of tax law, he would not suffer beyond that. But seeing the GST laws order of the Honorable Supreme Court yesterday, you find arrest powers and other things getting validated so heavily. You may have to find that these are worries for the taxpayers. I'm not for a moment encouraging criminalization. That's not the thing. But if it's only a matter of discovery of information between two people, whether it should be criminal activity or not is a matter of which I'll. So, my own sense is these are the amendments to at a very high level. While I tried to very often earlier day Hindi movies used to be 2.5 hours. So, okay, whether they have content or not, they have to make it 2.5 hours. So I also tried to make it half an hour somehow, whether I have content or not. Okay, so so in a way, why? Because there's nothing in the act for the administration side. I can only find it that reassessment is slightly more worrying. Ability to not carry forward the TDS from the old act to the new act, the two acts remaining perpetually active together. These are the things I could have summarized in two ways. What will resonate is the detail. Assessment is always a section which is better understood when it's applied. Because when in fact, I am visited after the Supreme Court decision on limitation, where if you apply the formula, the dates which the Supreme Court has given, there is a default is one way, 1 day. That is, still it fails the test of limitation. I am not encouraged to go and tell the court that I still qualify under limitation lapse, and therefore that kind of a fine reading of limitation clauses will apply only when facts emerge along with the law. Till then, we will be talking in isolation, a little abstract. It will not sink into our mind. But put the dates into the section, possibly you will find that there's a better understanding of those concepts. I have not found anything which is so drastic that we have to worry, but nothing favorable too. With those thoughts, I will leave it.
Thank you, sir, for all those nuanced interpretation which are not comforting as a business or a taxpayer, but nevertheless, probably we will have to represent it through BCIC. We'll take up some of these worries and we'll represent it. Now we'll open up the for question and answers. Any queries to the panel?
You cannot ask questions. According to Padam, not me. No, we ask question after that.
Thank you very much for your time, all of you. My question is in relation to, any one of you can answer this, since all of you are esteemed experts on the topic. We know that explanations have been assimilated into the main provisions. Now, as far as interpretation of explanation is concerned, we have point of views, judicial point of views on both sides. One is that an explanation can expand the provision of law, and that, let's say if it's a definition provision, let's say 916 royalty or fee for technical services 917 had explanation 2 which used to talk about fee for technical services, saying fee for technical services could only be services which are of managerial or technical type. And the interpretation of the explanation used to be that because the word fee for technical services falls between technical and managerial services, it should be interpreted narrowly. Whereas there are other explanations in the Act itself where the courts have said it could be interpreted widely, not narrowly. My question is, now that these explanations are no more under a separate heading, are these to be still considered as explanation? Because rule of interpretation would say no, it's part of the provision. And a provision generally can be read widely when it comes to tax provisions. So just wanted your thoughts on that.
Okay, let me give my views. You have two other provisions, they can add it up. See, the entire intent of explanation is that it expands the meaning of the section. That was the original intent. That means I define A, and then I add an explanation to A deemed to include A, B, C, D, F, G. That entire explanation, now it has been removed. Now what under the new act says? A, the above shall include ABCD, the above shall exclude ABCD. Now the entire concept of explanation has been removed. Therefore, the meaning given for the explanation, what was original meaning under 1961 Act, may not be relevant today. Unless contextual interpretation, which is always permitted under the revenue legislation, what is called context in which it is given. The contextual interpretation, still one can do that, but not the meaning of explanation. That's number one. Two, the phrases like royalty, fees for technical services are all still defined under the new act also. But the definition of the new act is nothing but coming in a different language. As Padam was mentioning about royalty, as PVS was mentioning about the reassessment side. It's coming in the language, but not in the language like explanation. Therefore, to that extent, the meaning will continue. That's what I would like to put it across. The third important aspect, not only for royalty and fees for taking, it is applicable for all the provisions of the Act. Savings and clauses. For example, if you take 916, royalty, there's a circular under CBD, it is given a multiple circular under 916. 917, there's a multiple circular. For example, a business carried out outside India, what is meant by business carried out outside India? What is meant by income earned outside India? Leave the judicial precedence. So the reappeal and savings clauses had a lot of meaning. Now the question is that whether those circulars are relevant under the 2025 Act. That is an issue. That's what I would like to put it across. While the concept of the royalty and fees of the base meaning has not taken away, it continues, but the context in which it is coming is what needs to be examined.
An explanation has a role vis-a-vis the body to which it is attached. It tries to do anything. As you mentioned, it may explain something. Courts have gone to extent of making a statement that in particular context it shall also expand. That's coming by an exception, not necessarily as a matter of general rule in the context in which it's coming about. Now, removing the explanations being attached to a section and making it a part of an independent statutory provision means that it has a role of its own to play, not being tagged on or attached to something else to which it was appended earlier. For example, therefore, if you're looking at 9.1 explanation royalty talking about as an example now, the explanation becoming a main body, I will look at the context in which that 9.1 is talking about incomes deemed to occur or arise in this country. I'm therefore going to make a statement, this is talking about something deemed to occur or arise, therefore this section needs a very strict interpretation that also should attach something now which is coming as a part of the statute. Earlier I wouldn't have had that much of liberty to make a very strict interpretation if I were to be an explanation trying to explain some provisions earlier. So the question therefore now is of a explanation becoming a part of the statute itself now becomes amenable to or becomes subject to an independent examination in terms of an independent provision of the statute itself.
To what extent do you believe, judgments or circulars, that's a question to be looked into, right? Circulars and judgments that have been delivered before need to be re-looked as to what extent they've been overruled or are still in play.
So the question therefore is, ultimately, the context will have to guide the whole of the situations concerned. Merely because an explanation has now been removed, if there was a particular meaning attached by the court decisions, in that meaning was actually supporting what normally people felt in the circumstances concerned, justifies their overall context, then that meaning should continue even under the new law. Should continue under the new law also.
Yeah, firstly, thanks all panelists for highlighting the points. In continuation of the explanation, do you believe when the Finance Act, after the past, and then when it will be amended, say about 2027, this explanation, they are going to bring in the new subsections?
No, I didn't get the question.
So, as on today, if the Act is amended, if section is amended, they used to insert explanation to explain the intention behind the amendment. So do you think now in 2027, when the new finance bill amendment they propose, instead of explanation, they will go on adding subsections?
Rupesh, I will ask previous to answer. Before previous answer, we are not even understanding what is a new income tax act. You are asking us to think what explanation will come.
Rupesh is looking at scalability of the act in the sense whether future sections have to be inserted, where will you insert? After all, amendments are inevitable in an income tax act. They have to keep coming. My own knowledge of arithmetic and mathematics is that numbers are unlimited. Okay. So alphabets are also unlimited. So where is the limited sense? We will add as many subsections. All that it has to say, subsection 22 will refer to subsection 1. To say without, irrespective of section 1, that's all. That's all.
Rupesh's question is more on the bureaucracy was drafted, has restrained itself from using particular things, has restrained. How long will the restraint continue?
Right,
When
sir.
they,
That
when
was
they
my
get it
question.
tomorrow, how long will the restraint continue is this question.
That's right, sir.
Will they have an explanation added tomorrow? Will they have notwithstanding added tomorrow? Because they're so compelled about it.
Yeah.
Therefore, the question is coming from their conscious avoidance of particular strategies, particular terminologies. Would that continue to exist in the future also is the question is asking. Am I going to therefore use the word explanation tomorrow, or it's going to be avoided for all times in future? Am I ever going to use the word notwithstanding anytime in future, or no, it is going to be irrespective of? That's the question is asking us to look into the future, crystal ball, look at the bureaucracy's attitude and give a conviction answer today to say, hey, they're not going to use, or they're going to use it.
So we moved from interpretation of the bill to interpretation of Rupesh's question now. Mike.
What is quite clear is that the government chose simplification over the substantive changes that they wanted to do, right? In terms of, I mean, at least at the face of it. Now, there were a lot of substantive changes that the industry was kind of representing, let it be a ESOP as to when it has to be taxed, or many things on reassessments, judicial precedents. So does this mean that with the enormous efforts going into the new income tax bill, the substantive changes will have to wait till probably 2027? Or how is that needs to be looked into?
I just answered this in your previous. The first government made a first step of simplifying. And as I said, this government listens, and I have been having a lot of discussions. I have been having discussions in my personal capacity. This government listens. And if there are substantial changes needs to be done, this government will do it. But as I said, the timing I'm not so sure. For example, I would prefer substantial changes in amalgamations. I don't need this business undertaking which is concept in 1961 for the purpose of tax evasion. Today that concept is not there. So we need to, as PVS said, the advocacy has to continue. I don't want to lose hope there's no substantial changes. It will continue. Advocacy will have to continue. We need to work with the government. There's no doubt about it.
Assuming that this bill becomes an enactment, the old act survived for more than 6 decades. We should not have again a new act coming too soon. That will be quite chaotic to have too many acts coming in the succession. We even see in GST law, the concept of subsuming so many legislations into one was a big achievement. So there was a reform. And therefore, there can be little chaos in the administration. Here, there's no reform. It's only changing the old act with new one. So my own sense is the opportunity of reform will not come for another 30, 40 years to take anything. So anything will be some kind of an added fix from here, some sections here, some subsection here. Beyond that, I don't see a substantial reform coming up in a way which will, suppose you have to think of something so drastic, maybe another schedule will be added. Beyond that, I don't see anything which is happening with that. So this is the construct, we have to look at the, like if my family grows beyond a one room, I have to move out of the house. Nothing beyond that which can happen. Otherwise, we have to adjust within the same space which is there. This is like a one room apartment. You have to live within that. You will not be able to travel very easily outside.
Even between now and when it becomes an act, they cannot do
that. Any amendment can come. But again, we have to think that the framework is given is to simplify. The old act is restated. So all the errors we all going to say, sir, this explanation, add a little more here, add a little this you have missed out intercorporate dividends, they can incorporate. But to move away from explanation to subsection and the chaos which will cause in the interpretation of that, that's an inherent feature of that chaos. And that needs to be handled only through litigation. And it cannot be solved. So all the precedents which we have established over the years to come to the same state as we are today may take another 20 years before we are in the same state as we are.
The question, therefore, is about the background or the mindset with which this effort was undertaken. Was it to have conceptual changes? No. Was it to bring in new ideas into the statute? No. Was it to bring the international practice into the statute? No. The whole purpose was to remove the flab from an existing act and make it shorter. That is the whole purpose. There is no purpose of a conceptual change. That's why the exercise remained confined to the bureaucrats. There was nobody from the industry, nobody from the professional, nobody from the judiciary involved. So there's no thought process that is there behind this exercise at all. And therefore, it's limited to a particular domain of work, not necessarily a comprehensive set of revisiting the entire provision for a particular purpose. Therefore, in that mindset, you would understand and appreciate. And what they told the new committee, by 10th of March, you give recommendations. The committee that has been by the parliamentary committee, they are supposed to give all the recommendations by 10th of March. That means by somewhere in this parliament session itself, we are going to find this bill becoming an act. They would like to tell you because we would like to give you time from April 26th, it will come into picture. But then the question is that there is no real attempt to bring in a conceptual change, no philosophical change, just a reformatting is happening. And to that extent, therefore, it has to be appreciated in that light. We were looking at so many things. We were giving recommendations from all over the country concerned, saying that there is a genuine attempt or a real attempt to change the entire fabric and the entire philosophy of law. That's not going to happen now. In my opinion, therefore, it's going to remain restricted to some exercise of this nature only.
Thank you. Said so far, it seems like it lacks input from people who are really involved in, because the language of the law is so subtle. That is not there in this. Actually.
You need to have a theme to work about. Yeah. You can't have people giving different portions of the act to say you do whatever with that portion. No, there has to be an overarching theme. There has to be an overarching principle that will guide. Somebody has to control that. There's no visibility of that control coming about. There's no visibility of a particular theme going about the entire enactment. They've just gone into different people. That's the report we get, that the government gave it to different people, different batches concerned, different portions of the law to just reformat and give it back, and that's coming as now some sort of a product given to us. That's not exactly an elegant way of doing, working with a very important economic law of this country.
The major issue is that what is simplification? Is it simplification from whose perspective? Third, if I have to change the Income Tax Act, what is the objective that I need to achieve? These three are the most important aspect. But to my mind, all these three are led to only one, change the language. That's all. It's like in younger days, I don't know about Padam and P.V. Srinivas, in my younger days, where for a difficult books, I used to buy guides, popular English guide, or that science guide I used to read, to understand what was there in the subject. Now, I don't need a guide. The itself is act as a guide. That's all I would say.
I also bought guides, but only to pass the exam.
Here. So, what would be the role of the schedules? Let's say Section 10 has moved into a schedule now. So, will that be tested in the courts, and will you go provision by provision interpreting that? The importance of the schedule now, according to you, sir.
In fact, just before you are asking, me and Padam are discussing on sidelines. I'll just give 2 examples. Agricultural income. When you go to chapter 3, first thing is that chapter 3 had a heading, income not included in total income. So we used to always define as a professional, heading of the chapter is a lead aid for interpretation, going from Supreme Court judgment, KP Varghese and various judgments. Now there is no heading of the chapter. Now whether that case law is relevant or not relevant. Second, excluded income excluded from total income. Me, PVS and Padam, sometimes tax professionals also agree on a common point. We all agreed on one common point. If it is excluded from total income, there must be an inclusion, then it must be an exclusion. There's a beautiful definition by the Supreme Court. What is excluded is only what is to be included. What cannot be included cannot be excluded. That is a adage. That used to be the principle. So when I apply the principles on the exclusion, like agricultural income means derived by various acts. Similarly, 10(2)(a) partnership exclusion. Now, all those things, now it is not under section, it goes into chapter schedule. Now, schedule to the Income Tax Act has always got a specific meaning. It is part of the Income Tax Act. Whether schedule can override the provisions of the Income Tax Act, the answer is no. But today, to the schedule, what is appended to the Income Tax Act 25 does not have anything to override the provisions of the Income Tax Act. Therefore, schedule has to be interpreted independently. But what is to interpret that? Everything is in a form of an Excel sheet. Agricultural income is in column A, condition in column B. Column B says it shall be derived, B, C, D. So what is to be interpreted? So you have an issue there. But I go back to the fundamental point. It is not like 1922 Act or 1961 Act. 1922 Act or 1961 Act, for example, Section 15C of 1922 Act was given as a deduction for the undertakings. 1961 Act completely changed the Section 15C of the Income Tax Act. So the entire section came into picture. Here the entire section is not coming into picture. The wordings were made in a small bullet points in an Excel sheet. So to that extent, that meaning what was given under the old law will still continue in the form of a contextual side. That's my view. I will give it to Padam.
Nothing else to add on this matter. Nothing else to add on this matter. There is a Supreme Court decision, Williamson's case, about the entire role and the interplay between Chapter 3 in the current law and Chapter 6A. So what is a deduction, what is an exemption? All those are going to get sidelined technically now. We will therefore await for the exact way in which the schedule has to be interpreted. Going to be a little difficult issue. Otherwise, the entire genesis of law on the interplay between Chapter 3 and Chapter 6A and the fundamental concept of what is going to be included, what is going to be included only can get excluded, what happens in those situations concerned, how do you go with charitable trusts concept, what about the circulars there. This is going to be, in my opinion, I'm not able to fathom immediately, but it's going to give rise to a huge amount of battle in terms of the entire setting of Chapter 3 in the context of the new direct tax code.
So, one question to Mr. Srinivasan.
You're supposed to ask a question.
I'm not sure why are you supposed to ask a question.
Yeah, I can. Sir,
Sriram wanted you to ask some questions. Yes, we have come to that.
Sir, we have been hearing from our professional side that it's an opportunity for the next 20 years. Fine. Sir, what are the intent? Opportunity for professionals. Sir, what are the intention of the finance minister to get into this law without? I was talking to one of the commissioners who was part of the working group who did this law. He said there's nothing in it. So, what exactly was the intention that she wanted to have a brownie point that I've done this act or this bill, or what exactly? If that is so, if we all feel there's nothing much in it, is it possible for the government to relook into another bill separate, completely?
Before previous answer.
We have to see there is a government never acts without a reference. They will say the reference which is made to the committee. See, to say these 21 committees have formulated, or these are all in public domain, I'm speaking out of that only. They would have got a point of reference. The point of reference is, please simplify the act in terms of readability, nothing. So possibly if the reference is not very specific, you will get a product like this. If the reference is that I want tax reforms which will enable the country to progress as an economy, that's a different ask. So the reference is very limited. The finance, be it the finance minister, whoever is there, my own sense is to say that anything better should have come out of this exercise will all go back to say what's the reference which has been made to the committee. If the reference is very limited, they will possibly try. But I draw something which is just because I could have spoken it even during the Honorable Finance Minister mentioned few things during her budget speech. She talked about Nyaya. Nyaya means justice. Has this bill resonated with that concept of Nyaya? I don't see. In the sense, Nyaya means something new should emerge. For example, even the criminal law which was altered, it had some elements of new things. It says, if there is no adjudication on bail, the bail shall be automatically granted. There was a time lag, there's a monitoring of the cases, speeding of cases, all those things were there. So some nuances, it was the old law, no doubt, but with some new nuances. Is there something here in this act to say there's a new nuance, which other than presentation, there's nothing. So this Nyaya concept, if she has talked about Nyaya very recently in the context of this bill only she has talked. This is to bring about Nyaya. If this bill has to bring about Nyaya, it has to start where? Certainly not the reading of the act in terms of provisions and all. It has to start in administration. Administration, Nyaya, I'm not able to see at this point in time. If it's done at the back end also, I'm happy. It's not necessary that they have to pronounce to the world that they are better. If they scheme it, step it up backhand also is fine. Then second one, trust was scrutinized later. That means this is also very powerful statements. I don't think ministers make just catchy words because they appeal to the public. They mean what they say and they will implement it. Each of these phrases have a weight of their own. Trust first, scrutinize later means where is the trust which is first, which is visible today. There are certain good aspects. 95-96% of the refund claims get granted immediately. But the disputes, those which are disputed, that is not visible. So I think if I have to judge it, you have to judge this bill in the context of the words used by the Honorable Finance Minister in a budget speech, and then check it out whether it meets there. Somewhere I will say, somebody will point out, even I will point out if I get an opportunity, that these elements which you have talked about, kindly see whether those elements can be further brought down and inserted in some way.
Ravi, just answer your question. What the Income Tax Act has done good, it did not do any bad. It did not do any bad. So nowadays we have become more philosophical. If somebody asks me, Sekar, what help I can do or what help you want from me, they say that, Sekar, as long as you don't do anything harmful, it's a big help. So the first thing is that the new act has not done any harm for us. So let's take that first positive. Second one, you are talking about professionals, reducing the workload of professionals. Yes, the government was very serious that tax professionals should not have much work on interpreting Income Tax Act because they had a belief that chartered accountants, thanks to demonetization, some chartered accountants played a mischief role. So they said a lot of chartered accountants plays a mischief role. We need to reduce the dependence on chartered accountants. And the taxpayers should read the Income Tax Act, interpret on their own and then make their own cases. But very great intention, but the way Income Tax Act is there, as me, Padam and saying, for another 30 years, I am very happy about my profession. I'll continue to be relevant Income Tax Act. People said artificial intelligence will take away the role of the tax practitioners. But no amount of artificial intelligence can take away the provisions of the Income Tax Act 25. So we will continue to be relevant. Third one, I agree with PVS. If this Act 2025 has to be make it easier for the taxpayers, what it calls for not on the sections on substantial provision, but sections on administration. If it is followed by a very rigorous implementation of the administration reforms, then the government achieves its Nyaya and trust first, scrutiny later. If administration reforms are not carried out, simple case, on somewhere in December 29th, because 31st or December 30th and 31st were Fridays and Saturdays, January 1st is a holiday. On 29th evening, there are some of the companies in Bangalore, they have a tribunal orders. The tribunal orders given effect, they will get a refund. The refund can be adjusted against the demand. But no commissioners passed the OG orders. Despite the law is that you have to pass a OG order within 6 months. They did not pass the OG orders. Lot of companies, they received an attachment notice for their income tax due when my money is due with you, you are not giving my money. But you are asking me to pay a money which is not due from me. They visited an attachment. Then we had to go with the commissioners. They said, okay, Sekar, we will do this, we will do this. But the harassment, what we went through for a week was phenomenal. Now, if you really want to address the taxpayers issue, you don't need the Income Tax Act. You need to pass a circular and notifications to the department to make administratives better. Unless that comes, all those things are good, and we can do a half-a-day seminar, one-day seminar. We can talk, we can enjoy it, and we'll continue our profession. That's all Ravi is going to happen.
I will give this in a different context. in the budget documents, there is a receipt budget. In that receipt budget, there is a statement of revenue foregone. That's a very interesting document worth reading. That gives you statistics about how many returns have been filed. Up to November 24, 7 crore 84 lakh returns were filed by individuals across the country. 7 crore 84 lakhs. Now, because of the tax limit getting enhanced to 12 lakhs, about 6 crores 60 lakh returns will be non-tax paying because they'll go below. So effectively, 1 crore 20 lakh individuals remain the taxpayers of this country. Only 1 crore 20 lakhs. In the same document, they tell about 10 lakh companies having filed returns, out of which 50% are loss-making companies. The only contributor, therefore, to the revenue is about 5,000 companies across. Now, partnership firms are there, statistic, but not very significant in terms of the contribution. Therefore, the individuals are contributing much more than the corporates in terms of the tax. 18 lakh crores is the contribution by individual, 15 lakh crores is by the corporates into the central government collections now. Now, it's a very limited tax-paying population we are all part of here. We are all part of that tax population of 5,000 companies or that 1 crore 20 lakh people. And we are facing the brunt of entire action of the government. Therefore, we are feeling it very difficult to say that why is this people who are contributing to the tax collections of this country are being targeted. They're being targeted for a reason that the powers given to the government officials under all regulations are increasing. They're giving them more and more powers to use and to create fictions under the statute concerned that this shall be an offense, this shall be punishable, this shall be the consequence of small violations of law. The compliance of an industry today and an individual is significant in terms of not just the Income Tax Act, all regulations concerned. We are facing the brunt of compliance and we are facing a threat that a non-compliance of even a small item can lead to disastrous consequences. Therefore, we are working under fear always. And we don't find an administration that is sympathetic to you. We are finding, therefore, an administration that is becoming always onerous, always trying to draw adverse inference, finding an opportunity to say that there is something that is against you. And to that administration, there's no accountability. The fellow may pass any order he wants to. His promotion is not stopped. His orders get cancelled by the tribunal. Nothing happens to him. He has absolutely freedom to do what he wants. He has a pen, he holds it, and wields it and uses it in the way he has to. There's no accountability. Therefore, to that extent, therefore, we are facing the brunt of a very insensitive department administration, and that's causing trouble to all of us. Nobody is fearing paying taxes concerned. I don't think anybody is fearing paying taxes. You tell them the tax is going to be high, nobody will going to crib about it. They're cribbing about the way in which the law is being administered. And that's the sorry part of the whole issue. And do you find anything in the new bill concerned in terms of addressing that administrative like, you don't find anything. The powers are continuing, they're going to be increased, and there's no accountability on part of the revenue. And that's in my opinion, the most sore point in terms of the entire administration of any revenue law in this country.
Sriram, you have any questions for us? No questions?
Well, if
Sorry?
Taxpayer charter.
Taxpayer charter.
It's there.
Anything moved in this present law?
No, these charters are already there for a long period of time.
Yeah.
They were there. They have been given, board has given circulars. They also gave a charter of your rights. They also gave a charter of your duties also, to say what you're expected to do also. So both charters are already there. But they're only for the purpose of showcasing, not necessarily for implementing.
That means,
It is like this, your name is Ravi, everybody knows. But suddenly you decided to put your name outside your home. Same thing, charter. Okay. Rights everybody knows. There is a 1940 circular is there. What is the taxpayer rights? There's a 1961, there's a circular, 65 CBR circular 1965. What is the duties of the assessing officer? In fact, in that there's a very brilliant para is there. Even if the taxpayer has not claimed a deduction, it is a duty of the assessing officer to bring it to my notice, allow me to claim deduction. There's another brilliant para in that circular. Even if the taxpayer has made a wrong claim by foresight, assessing officer duty to bring it to my notice and allow me to rectify. It is there. But as I said, intent is different, practicing is different.
Bringing it into the statute, will it help?
It is there now, 1969, but it is already there as a part of a charter. Everything is there. You go to income tax department, they put a charter. Every room they put a charter. And they also mention if anybody asks for any support, this thing, please complain to ombudsman or aegis, it is there. And the first thing you enter, somebody says, sir, I've got a biodata, can you get me a job? Everything is there. There's nothing, it is not there. Whether it is acted upon, that's a matter.
So just to add you, personally I am serving around 1,500 IRS officers all over India. I'm just sharing whenever I discuss with them. Even they are not happy. Like few officers I know from last almost 20 years, they have passed a favorable order. Within a week, they got a call from ministry and they have been transferred to Mufassil area. So it is not like everyone, officers are also facing up issues, sir.
The reason, I think, let me just make it simple one. The entire issue is not about the officer, it is about, you have an audit on the income tax officer's order. There is a fear of the audit, that's the reason. Yes, probably what they share to you and me in private, they are not allowed to share in public. It's there, but we need to go live with that. But unless there is a strong administrative reform as suggested by PVS, me and Padam, this trend will continue.
Rupesh, I may add to Sekhar's point. All of us have had wonderful experiences with officers. Individually, I don't think we are finding anybody. What we are trying to say, the system is not institution. When you say this act versus the institution is what we are looking at, we are not looking at an individual officer. So I fully resonate with what you say, because each of the officers have the way they work, the way they are able to appreciate the issues, the speed of understanding, they are all commendable. I don't think I can find fault at the individual level. But the final product I get is an assessment order. The final product I get is a delayed appeal. This is what we are looking at.
See, I'll just give it two examples of, I think, top-notch officers whom I have entered. Padam and PVS also knows them. One is Dr. Lalit Kumar Rao and Mr. N. Rangachari, who was also IRDA chairman. Phenomenal people. Phenomenal. Their orders are speaking orders, whether in your favor or against you. No tribunal or high court can reverse their orders because it's speaking orders. There are similar class of officers. For example, the former Chief T.S. Krishnamurthy. I appeared before him as an inspecting assistant commissioner. Phenomenal orders. But whether do we have a class like that? Do we have the mindset like that? Different. It's dependent on multiple factors. Multiple factors are there.
Excellent. Thank you. Thank you. As it always happens with any discussion on tax, we think we have factored so much of time, we don't have topic to discuss. I just noticed that we are already crossed our time by 4 minutes. And we thought we have nothing much to say. I mean, Shekhar was asking me as we entered, we booked half a day, what will we do, right? I said, sir, we cut half an hour in the end, we extend the lunch, but we have actually eaten into our lunch. That's what tax brings to us. I think just to sum it up, the taxpayers were looking for reform. Possibly the intent of the government was simplification, but I think what we hear from the panel is it's neither reform nor simplification. Reform has been cut down to reformatting. And if I were to look at some of the examples that Padam, Mr. Shekhar and PVS quoted, probably even the reformatting could have been done a little better, right? But the only thing that we will do as BCIC is some of the points that's been made in the panel, and some of the points some of you may have on what you want to represent on the act, what we can do better. Please mail us, and we will work on a representation, and we'll continue our advocacy efforts with the government to see how we kind of put our points across. Because at the end of the day, the real intent of everything is to ensure that the country grows, and all the industry associations and bodies are there to represent the industry, to make the government understand our pain point. Like Shekhar said, we've seen some success in the past 2-3 budgets in terms of representations we made. So we yet again end this session saying we remain hopeful. Possibly an opportunity missed from a reform perspective, but I don't think the charter was never reform. It's like you enter a movie hall, you expect a certain movie. Possibly it is not the director's fault. It's probably we didn't understand the content of the movie, or expectation from the movie was possibly a little more than what the director was out there to do. So with this, I thank the esteemed panel here who have taken out entire half a day just to be here. I'm sure the amount of preparation that has gone into it's a significant amount of investment of time from Sekar, Mr. Padam and PVS. Thank you so much for your insights into the new bill. And I also want to thank all the participants here who taken out your time, come here and make it an engaging session. On behalf of the Direct Tax Expert Committee, thank you so much for attending and wish to do more sessions like this. Sir.
Thank you once again. On behalf of the chamber, we would like to hand over a small token of our appreciation. I request Mr. R Sekar and Mr. Ravi to hand over the memento to Mr. P.V. Srinivasan. I also invite our Secretary General, Colonel Harish, to come on stage, please. I request them to hand over the memento to Mr. Kincha, please. I request Mr. Ravi to hand over a memento to Mr. R Sekar. To Mr. Sriram Ranganathan also, sir. Thank you once again for all your support by way of participating in the seminar. The session is declared concluded now, and I request all of you to join for lunch. Thank you.